forward to a power-packed agenda here, starting with our first session, Demystifying NFTs. If you have been following emerging tech trends as of late, then you have undoubtedly heard of the NFT craze that has captured the attention of everyone. The session today delves into key characteristics of NFTs. So without much further ado, I would like to invite on stage our speakers, Mr. Viral Thakkar, AVP Senior Principal Technology Architecture Infosys, and Mr. Ravi Avhad, Senior Technology Architect Infosys. Please. Over to you.
Thanks, Neha. Good morning. Good morning. I'm audible? So, pleased to have you all here. My name is Viral Thakkar, and he's Ravi Avhad. Hello. Both come from Infosys. Just want to bring a note here. The presentation that you see here. Do you need a mic? I'm audible? Okay. Sure. Better? Okay, perfect. So the views that you will hear today from me and Ravi are completely personal. The research and learnings that we have done in last 2 years during the pandemic through participation in various hackathons, research, white papers. So we are trying to bring that here to all of you. Can we get the presentation? Okay, so we all have been hearing a lot of digital modernization transformations in last 2 years, right? I'm sure most of the people are from tech background. So what we started learning and doing in during the pandemic time, how we are well prepared now for the next. And what is that next? The metaverse is one of the next element that we found we should be focusing on. If I look at broadly, the 3 buckets of metaverse, right? One is on the complete immersive experiences, which is all about augmented reality, virtual reality. Second, which is all about bringing physical plus digital together through technologies like digital twins, 5G, IoT, and so on. The third, which is we are possessive and close, passionate about, which is all about decentralized applications, right? It could be DeFi, it could be non-DeFi, right? The one common element that we found across all the 3 segments of metaverse is the NFT. And that's why we choose this topic. This is something very close to what we have been pursuing last few months. And we thought, let's share the knowledge through such a great platform that we have through Nasscom, right? So that's the background. Now, if I look at NFT as a word, right? What the world, I'm sure all of you have some degree of perception, some degree of, confidence or way of, agreement or disagreement about this entire NFT as an ecosystem, NFT as a complete, the platform that it brings from a lot of vendors and partners into the industry. What we are trying to do here, try to bridge that gap through some of the slides that we have, will make you more closer to the different NFTs, some of the use cases that we have been hearing and practically implementing. And then we'll also try to give you some of the leading use cases, which we could collaborate after this and work together or do a brainstorming together. So the word non-fungible tokens, right? What is fungible, right? When we first started with all about fungibility, it was very difficult to digest, right? For a common, the vocabulary. The easiest way to understand fungibility is to replaceability, right? The easiest way is, rather than talking about non-fungible token, I would have said, it is a non-replaceable token, right? But let's go with the industry term, which is NFT today. Now, what is that replaceable? It's always easy to give a contrast example, correct? So the example that will give us closure to NFT is the currency, right? You might have seen certain videos and have some background about this. This is a very common example that I'm borrowing from that research, is that currency is easily replaceable, right? If you have a 100 rupees note and I have a 100 rupees note and a third person has a 100 rupees note, we could exchange easily, right? There is no way, you could trace whether the 100 rupees note has been, moved from this table to this table via what path. It's not possible, correct? Because we don't write our names or ID or a platform or any digital signatures that we do on that currency. It's a paper, it's replaceable, there is no tracing, there is no uniqueness about that specific currency that we have, right? There are various such examples where we could relate to a replaceability, the fungibility portion, right? So now looks at what is non-fungible, right? The one that will give us closure to the topic that we have. What are those examples? The typical examples that we hear today and what we, the arts that, let me, look at the next slide where we have a lot of examples here, correct? If you look at Amitabh Bachchan has a 4 collections of different NFTs today. He has actually put lot of poems from his father on the Madhushala collections, then all the posters where he has actually done his signatures, some of his shots which have actually put together, which is digital, signatures. All these are the 4 different collections. These are in crores. To be precise, what the last value I know, it goes close to 7+ crores, right? There are various such examples, right? The 83, the movie that has been recently done by Ranveer Singh. Purposefully, I'm bringing the example which is near to us. There are various such examples in non-India based as well, right? The first tweet which got sold as an NFT, right, by the founder. Various such example, CryptoPunks, you will hear more about that in the NFT history. But these are the examples which are closer to us within India, right? Look at other examples, right? The celebrities, the actors, the teams, cricket T20 teams, individual players, Rohit Sharma, all these teams are actually bringing their NFT token to the marketplace. Now if I take a pause here, right? I'm borrowing this term, Sarkar, Bazaar, and what is the third one? So what I'm trying to bring from here is that we also see a very similar terminology when it comes to the NFT, which is content, which is the creator, and the commerce, right? Now, if you look at all these examples which is on the slide, there is the content. There are collections from the people who have actually minted this. Then there are commerce. Commerce is what the platforms on which these NFTs are getting minted, transferred, sold, transfers, everything. So that is all about commerce, right? And there are creators, the people who create those. Those could be celebrities, those could be sportsmen, those could be individual, those could be any organizations. And that's the piece which we would like to focus in the second half of the presentation. All these use cases, if you see, it's being focused around certain segment in the industry today, right? What all of us come, many of us, I would say, come from the enterprises where we individually have not experienced the power or the usage of the NFT. That's why we have developed a solution, which will give you closure to how you can and we can together bring it to the masses, right? That's what we're gonna talk about in NFT, right? If I just take one example here, why all of this is actually getting tractions, why these are getting sold in millions and lakhs, and there are few elements to that. What are those elements that we need to understand? One is passion, right? Possessiveness, right? If I hold Amitabh Bachchan's token, then I have some possessions to that, right? Because there is a lot of fan following, there is a passion to have those tokens with the people. So these are some of the things that we need to understand about emotions, passion, creativity, fan following, that makes these tokens very, very, very valuable and transferable, right? The last part that I wanted to focus on this slide is actually people also relate to a cause, right? Rohit Sharma started his tokens he wanted to, support this one-horn rhinoceros. So he started his token, Rohit supports rhinos. So that's why he's promoting the tokens and bringing to the market, right? One more point that reminds me, which is very, very, very important here, is the rarity and uniqueness, right? For example, when Amitabh Bachchan or any of these examples, if you look at, they could have minted thousands and lakhs of tokens, right? But then it doesn't make sense, right? Because the value is in rarity, value is in scarcity. If there is a limited edition cars, if there is a limited edition some entity, then the value increases, right? So we have to keep this in mind when you find some examples. How many tokens to be minted? How much, for example, the first NFT, the crypto punch, they have actually minted only 10,000, right? What I'm aware about Delhi Capitals, 83, everyone, one thing which is common, including Amitabh Bachchan's 4 collections, there is a rarity. They create that scarcity so that everyone, loves to have that in their possessions, right? Last component on this slide, what we have talked so far is all about arts, collections, digital assets, correct? It is not just enough, okay? One more characteristics that was there on my previous slide is all about programmability, right? Today, all these tokens are getting minted, which are in individual in nature, like most of them, right? I have to mint 1,000 tokens, I have to mint 100 tokens, I have to transfer, I have to buy. It's all getting in an individual way, right? What differentiates is now the semi-fungible tokens, or which is, I talk about the programmability, right? Programmability gives me the power, right, where I can cross-utilize. If I am here today, I am having this pass, right? Today, this is the identity. After the event, I can mint this, and this could become an NFT for me, right? This could be programmed, could be put into a platforms, and this could give me entry to so many other events. I'm just giving hypothetical scenarios, right? The thing that I want to indicate or highlight is that it's all about individual arts collections, and beyond that, there is a lot of ecosystems and use cases that we have, right? Quickly, in the interest of time, to give you how the industry is looking at NFT market to grow, right? You look at any of these platforms, there are 7, 8 different platforms that we have got already research from the references that we gave here. The platform like OpenSea, Binance, these are, we just, bring those 2 names, but there are so many different names here that we could see here. Everyone is doing great in terms of their participation, in terms of volume, in terms of attracting different people, right? Every month they see increase in terms of adoption from primarily you call millennials, or if you call, some of the targeted segments that we just talked about, right? Number-wise, I know we all techie, we don't believe too much in numbers, but for the platform here, the target is, what there is a belief is that it's going to be 147 billion industry by 2026, 35% growth. The APEC is going to be the major market, and I leave it for all of you to read here. But this is just to give you a glimpse about there is a lot to discover. There is a lot to unearth into NFT ecosystem for the masses, for all of us as an enterprises, how we can bring closure to our people, right? I again go back to my terms like content creators and commerce. That is going to make a big difference from Sarkar, Samaj and Bajar philosophy that we have heard in many other cases, right? I'll request Ravi, who is my colleague, to bring his views about how the ecosystem has been actually playing and supporting these different use cases, right? The metaverse 3 segments that I talk about, and then we quickly jump to the reference architecture that we have, and a small video that to give you more closure to the implementations. Does it work? Any questions so far, or we will try to keep time for a couple of questions, or we are here throughout the day in the lobby. Feel free us to gel with us or brainstorm with us. Sure.
Thanks, Viral. Thanks for demystifying some part of NFT. I'll try to demystify it further. So on your screen, you can see the NFT ecosystem. We'll try to go each important components, because there's too many things to cover. So On the left-hand side, you see the infrastructure. So there are some prominent names like Ethereum, Polygon. It's basically the network protocol on which you are going to have your NFT smart contracts running. Then there are different marketplaces. You might have heard about OpenSea, Binance NFT. Within India, there are a few more markets. So we'll discuss about that in next few slides. And then you have the games. So games as an industry is evolving from past few years. So if you think about games and NFT, I think there's a new market to be explored. So that's why it's an important pillar to this entire ecosystem. There are NFT-based domains available in this era now. So few prominent players in that are Unstoppable Domains, Namebase, and ENS. At the top, you can see arts and music. Probably with NFTs, you've heard a lot about art and music. So there are projects which are working with prominent artists in the arts and music segment to have their arts minted onto NFT. And then metaverse. So metaverse is basically a digital universe which is basically giving a unique experience to its users. Within itself, metaverse is a huge topic. So as of now, we'll try to keep it close to NFTs. There are collectibles. When we talk about NFTs, we mostly think in terms of collectibles. So there are different collectibles. Viral mentioned about CryptoPunks, there is CryptoKitties and more. So these are common collectibles which we have heard because of their values which has increased. And in terms of our media, either we listen to very good news about NFTs or very bad news about NFTs. The normal news usually is not in media. So in terms of, you can go and check the NFT sites and Bitcoin or blockchain sites which will give you details about that. And there are wallets. So what are wallets? Basically, it's your address at which you are going to have your NFT stored. So basically, wallet you can closely correlate with your own wallet. This is a digital wallet. There can be hot and cold wallet. So MetaMask is the most popular wallet that people are using across the world. And the sports NFT. So if you've been following sports, so NBA Top Shot is a very popular NFT marketplace where it's doing a lot of business. In terms of India, we've got FanCraze as an NFT market on which you get ICC events NFT videos which are available. Same, I think Delhi Capitals also is going to launch their NFTs through FanCraze. And there are some DeFi and news research projects which are going on in this segment. So we'll move on to the next part. So I'll try to take a step back. We listen about NFTs. We think decentralized assets, downloaded, etc. So why not NFTs without blockchain? So we'll just touch upon a couple of points around that. So if at all we had NFTs without blockchain, so someone has to download those assets, keep it manual, make sure they are highly available and they're accessible anytime they want. And if at all they get copied, so you have those legal enforcement coming into picture and all those additional tasks around that. Let's remove that part. Let's see, with blockchain NFTs, what you get is, your asset creation, ownership, transfer, all are logged into a distributed ledger and it's available to view for everyone. So you can go to any of the blockchain explorers and find the details around that. And as Viral already touched upon the rarity of the NFTs, so you can have, let's say, 10,000, 1,000, 100, those many number of NFTs created, and they can be sitting on the blockchain. So why we have kept it intentionally is you can see a couple of images here. So at the top, you can see with MetaPass Luxe. So it's one of the NFTs that we won as part of a hackathon. So that one NFT is worth $25,000 US. And what it gets you is, it gets you passes to premium technology events across the world. So it's available on OpenSea. You can trade it. You can keep it as a collectible. There's another NFT about skateboard. It's from Qualcomm. There are a lot of people who are crazy about that skateboards. So again, that NFT is easily available on OpenSea. So people who are passionate about few things, that's where there is an opportunity to tap into NFTs. We'll move to the next. Yeah. So we've already seen what is NFT, different dimensions of NFT. Now I've got history of NFT. The reason is, we are looking at the future, but it's important to know where we came from. So we go back to the history right down to 2013. So the journey started through colored coins. So if we have to put a story around NFTs, and if NFT is supposed to be heroes, colored coin will be the honest hero in that story. So colored coins basically started on Bitcoin blockchain, and they were initially used to represent the ownership of actual physical assets like metals or land and cars and etc. So in 2014, the first NFT was minted in 2014. It was minted by Kevin McCoy, and it was sold for around $4 to $5. So there was a counterparty exchange launched in 2014. So what they did was they launched a peer-to-peer financial decentralized open source network, which allowed the creators to put their assets on the decentralized exchange and trade with other users. So with counterparty, it served as an inspiration for other few major platforms. You can see Spell of Genesis is another gaming platform which took inspiration, or they put their gaming assets on the blockchain using counterparty exchange. Then the Rare Peeps. So this is another NFTs where it was a photo of a frog, in that, and they were very popular because there was a big fan craze, and if you go in the market and see the crypto price of those NFTs are pretty high. So what crypto peps did was they themselves launched an ICO on its initial crypto offering on blockchain, and they used that money to even fund further the counterparty project. So that's how it kept evolving. The reason we have kept it is we can learn something which is coming from past. Probably when we are looking at the future opportunities, that will definitely help you. And CryptoPunks, which Viral already talked about, it's a collection of, I think, 1,000 or 10,000 NFTs. There are unique NFTs. If you look at them, they would look like a normal image. And one question that comes to our mind is, if it's an image, I myself first had very difficult time to digest why NFTs. It's an image, I can download it, keep it on my laptop. Why would I go ahead and buy the NFTs? But the point is, you can buy and keep it, but the value comes from where you bought it and can you sell it. So that's where the value is. So CryptoPunks, as of now, it's trading at 100 ethers. So I'm not sure what's exactly price on that, but approximately it should be around 100K USD. So each of those NFTs is going around that price. And CryptoPunks became very popular. And at that point, there was, it brought an inspiration for two protocols, that's ERC-720 and ERC-721. So post ERC-721, there are a few more markets like CryptoPunks, there is CryptoKitties, there were images of cats in that. Again, that is a very popular NFT available on the OpenSea market. And post 2018, this market kept evolving and it became mainstream around 2020. So with ERC-721, you could actually track the ownership, transfers, and the transaction happening around the smart contracts for NFTs. And post 2020, you see NBA Top Shot, Axie Infinity, and furthermore. And in our reference, we have Fan Craze, which got launched, I think, towards the last quarter of last year. And it's following on. So in terms of Indian markets, so for RRR movie, I think there's StarCraft website on which you can buy the NFTs of RRR. Initially, they are listed at 0.20 Ether, which is 0.2 Ether or 20 Ether, around 6,000 Indian rupees. So we'll move on to the next. Yeah, so we talked a lot about what NFTs are and theory and around that. So if you look at the platform of NFT, these are different layers that you can see on the NFT platform. So at the bottom, you can see EVM blockchains and non-EVM blockchains. Now, what is an EVM? So EVM is basically a Ethereum virtual machine. So you are going to, the smart contracts or the programs that you run on blockchain, they run on an EVM. So you see Ethereum, Polygon, they're EVM-based blockchains. On the right-hand side, you see non-EVM blockchains, which is Near, Solana, and Terra. So we have put down a small demo of an application which we have tried to build on these three layers. We'll play that video in next slide. So we have built on top of Near. Near is having its smart contract written in Rust programming language. And Rust programming language, it's ranked number 2 in terms of sustainability. And it's only behind C language. So I'm not sure if C is used for smart contracts, but if we take a look at smart contracts perspective, Rust should be ranked number 1 in terms of sustainability. We just go one layer up, we see blockchain interaction layer. So here you would find a lot of components which allow you to interact with your blockchains, whether it's Supernode, Build, Monitor, or Notify. On the right-hand side, you see the Block Explorer. Basically, what they do is If suppose you do a transaction on any blockchain, you get a transaction hash. It will be a big string that you get. You can put that and search on the Etherscan. You can see all the details of that transaction. If suppose you purchase something, you can see the timestamp, how much gas it burned for that. Gas refers to the cost of the transaction or fees of the transaction. There's Polygon scan. In terms of our demo, we have used Near Explorer in around that. At the top, you see the presentation layer. So with the new technology, you've got new web technologies available for front end. It's Ether.js, Web3.js, or Alchemy Web3.js, and different new developer environments in terms of hard hat and brownie. When we talk about programmability, we talked about storage. So there's a file storage component which is also there on network layer. It's one of them is IPFS, Interplanetary File System. So, and then there's RV. So for our demo, we have used Near Blockchain, we have used Near Explorer, we've used IPFS, and we've used Morales. Now what is Morales? It's building an interface around IPFS, which will allow us to put our NFTs on IPFS and access it further. So we'll move on to the next slide so that we can, it's a short demo of the NFT platform that we have. We'll try to quickly put it up and play it. I'll play it here. It's playing the video. Yeah. There's no audio here. How can I add the audio? Okay. I'll have to take that back.
While the audio is coming up, we are just on the time. So what we have done is actually created a low-code solution. Okay, because writing all these smart contracts and blockchain it's not that easy, right? So we come up with an open source, layer, experience layer, Node.js as an integration layer to development blockchain networks, which we can use it, to create the NFTs for all the employees, the people who are following this NFT market platform. That's what we wanted to show here through a video. But,
Yeah, it's ready.
We will take it later through. Okay, video is here.
Yeah.
Okay. Audio.
Put in. I don't think it's playing. Audio is not coming up. Just take it back.
Model for an enterprise NFT platform. Enterprises can create unique NFTs for major milestones of special occasions and reward them to their employees. The enterprise NFTs can be listed in the in-house NFT marketplace initially and allow the employees to mint their own NFTs from this platform and trade within the organization. The top NFT contributor can be recognized and most active users can also be recognized. We will see a simple process of minting NFT from an image. Here we see we uploaded a picture and initially it is stored in Interplanetary File System IPFS. The IPFS image is used by the smart contract to mint an NFT and it is then added to the wallet of the user. We are using non-EVM blockchain Near to mint the NFTs here. All the transaction details of the NFT minting process are available on the Explorer, Near Explorer in our case. The minted NFT transaction details are also available in the wallet of the user, both sender and receiver.
Perfect. So
This is a simple working model for an enterprise NFT.
all right, so we've already touched upon a lot of use cases. I'll talk about the ones which we have not touched upon so far. So these are, if you look at the future, these are the areas in which when we meet for the next Nasscom meet, there will be a lot of work which will be done in these areas. So whether it is investment, gaming, on-chain resume, I'll just touch upon investment. So NFTs within themselves are considered as an asset. So there are organizations which are using NFTs as collateral and giving you a loan against that. NFT Fi is one of the example, NFT FI. In terms of gaming, so as I said earlier, gaming with NFT is going to be a new combination which is going to be very popular in future. The passers and the membership is going to be getting more popular as use cases. There'll be new digital identities with NFTs. The one which we are very used to is the social logins, but don't be surprised if you see NFT-based identities getting popular. And the property rights. So I think some time back there was a news that Maharashtra government as well is going to have the land deal details done on the blockchain. So don't be surprised if you see NFTs coming around in that area. And also with the with the property rights, you will also get what do you say? Not the rarity, but the transparency and the transaction time will get reduced. So if you have to do a lot of research on checking who owns the land actually, so it's going to help a big time in that. So I think it's such an interesting topic that we can go on to speak some more time, but unfortunately due to time we may not be able to take the questions. But we are around here, so if you want to reach out to us, do feel free to reach out to us. We'll be happy to answer your questions. Thank you, everyone. Thanks for listening so patiently. Thanks.
Hi. Thank you, Viral and Ravi, for that insightful session. As a token of gratitude, Nasscom has planted a sapling in your name, and we'd like to give you certificates for it if you could please come on stage. So,
Thank you, team.
So moving on to the next agenda for today. Now we have a roundtable on open finance and API strategies, which will be moderated by Sachin Kulkarni. He is the Senior Vice President from Fiserv. The other panelists include Vivek Shrivastava. He is the Head of Engineering and Pune Site Lead for Citibank. Mr. Amir Karveer, SVP Indian Operations for Open Banking from Mastercard. Mr. Vinay Jathar, India Head Data Engineering and Architecture from Western Union. So without further ado, hand over the stage to Sachin.
No, I don't have any presentation. Good morning, guys. Can you hear me okay? Yeah, at the back? Perfect. Well, good morning. My name is Sachin Kulkarni, and I don't think we could have asked for, as a panel, a better, more engaging, and more relevant topic, for the theme of this conference. So really excited. I also could not have asked for a better, composition of my fellow panelists. And when we ask our first question, I think just the title doesn't do justice. So I'm going to ask them to introduce themselves a little bit. But the format is, I'll make a few opening remarks about, my point of view on API strategies in the context of financial services and open banking. Just a few minutes, and then we'll open it up for, questions for the panel. We'll try and keep this crisp, because the idea is between us, we have something like 70, 80 years of collective, financial services experience. I need to watch so that I don't get knocked down. Look, we're trying to make this as relevant in terms of bringing to life some of the use cases, so you have some takeaways. But equally, just looking at you at the audience, we as panelists are also keen to hear your perspectives and your feedback. So hopefully we'll have some time for Q&A. so that you can ask some questions and also share your perspectives and use cases in what is clearly a very exciting and evolving space. So first of all, I'd like to talk a little bit about what are APIs and why APIs are needed, and then connect that a little bit with open banking and some of the industry trends that we see from a go-to-market perspective. And then finally, I'll just do a light touch on my favorite topic, which is the dynamic discovery of APIs, which is leading to true democratization, I think, and creating a level playing field between the Davids and the Goliaths, if you like. So the Fortune 500 companies on one side and somebody who's an entrepreneur in a garage on a bootstrap or on a seed budget. So APIs, if I sort of reflect on the last 3 decades of my software development experience and retail banking experience, there's about 50 different definitions of what APIs are. And as I was preparing for my opening remarks, I wrote this down. I think and this is pretty obvious, I think APIs are the most common and straightforward ways to connect systems. On the one side, you have enterprise apps, or any kind of app in a garage. And on the other side, you have web services that we all consume. And APIs are a way in which you can transfer data and functionality seamlessly and securely. This definition resonated with me because I could understand it, and it was sort of a very simple one. But in my view, I think whether you look at any online business, from banking to social media to travel platforms, it really now is all about external or public APIs through which all of us can consume the services seamlessly without having to know what the source code is, what the implementation level details are, or what the documentation is behind that API. But to me, I think the most exciting piece in this whole space is, I think, how organizations, all of your organizations and my organization, how are we creating excitement and creating communities of developers that can actually build on top of the existing products and extend those products, services, and solutions, and really crash time to market by orders of magnitude. That, to me, is the most exciting piece in APIs. And there's obviously public APIs and private APIs. Public APIs are all about consumer-facing applications and ways in which your enterprise can essentially interact with customers via multiple channels. I'm a banking guy, so I will obviously talk about omni-channel. But it's not just about social, mobile, and web. It's also now metaverse with augmented reality, virtual reality, and 5G. And private APIs are equally important in terms of giving access to your employees as well as your partners to really break the monoliths, go to a microservices architecture, integrate your products better, faster, create more immersive experiences, near real-time analytics, and all of those things that our clients are expecting, especially as we come out of the pandemic. And then the last 2 points I'll make in terms of what are APIs is whether you look at point-to-point integration, or whether you look at a hub and spoke model, or whether you look at the technically minded amongst you, enterprise service bus. APIs, I think, play a very key role in all kinds of systems integration. I mean, if you think about all those hairy, complex SI projects that you've led in your organizations, APIs, you value those teams that know how to write really good APIs and manage really good APIs. And the last point is, to me, it's all about standards, whether it's the Open API standard or OAS standard. I'm sure you guys have heard about or used Swagger. But the point there is, it's about creating language-agnostic standards that interact with RESTful APIs and in a way, therefore, creates interoperability. Why APIs, right? So that was about what are APIs. Why APIs? In the interest of time, I'll be very brief. I can think of 4 things: improved collaboration, easier innovation, data monetization, and added security. And I'll just double click on the last 2. So data monetization, this is all about the API economy. And I think there are all these buzzwords that get talked about often in conferences like this, right? API economy. API economy is a word that I think all of us have heard in conferences like this or events like this for about a decade. But I think it's for the first time really in the last 2 to 3 years that I believe data monetization or any differentiated intellectual property that we have is getting monetized through the API economy in ways that wasn't happening because the chasm of digital trust has finally been overcome in this contactless low travel, socially distanced world that got created through the pandemic. And then I think when we talk about security, these days, the theme is all about vulnerabilities and fixing vulnerabilities from a security perspective. But I think of APIs as a way of an added layer of security that developers can add through tokens and signatures and encryptions via API gateways in a way that protects your data and protects your functionality. So again, just to summarize, improved collaboration, easier innovation, data monetization, and added security. I'll speak just for 30 seconds on open banking. I really don't want to steal the thunder from Amar, Vinay, and Vivek here, but data sharing agreements between fintechs and the traditional FIs. So by FIs, I mean insurance companies, banks, community banks, credit unions. Those are very interesting in terms of making that whole collaboration seamless and much, much faster. And as an SVP of one of the largest fintechs, Fiserv, I experience this hand over heart every day. And to that end, we are really excited about our partnership with Mastercard, Finicity, which was acquired by Mastercard, and they have an open banking platform. Again, I'll let Amar talk about it, but our partnership will allow thousands of Fiserv FI clients to enable their consumers to share their account information securely with Mastercard's open banking platform and create far richer experiences, more payment choices, better financial literacy and financial well-being of the consumers. So this is not just B2B. My point is this is B2B2C, right? Go-to-market approach. At Fiserv, we have set up portals. I'm sure many of your companies have done that for developers to create that community. We call it Fiserv Developer Studio, and a marketplace which we call Fiserv App Market for merchants and fintechs. So for example, we have a product called Zelle, or we have a product called, this is for P2P account-to-account payments. And we have a core banking core called DNA. And there are thousands of applications that third-party developers have developed on top of these platforms. So that's very interesting from a go-to-market perspective. And then finally, on the one hand, companies like us are doing that, which is creating these public APIs for you to build applications on top of. But on the other hand, consumers now can simply access APIs directly through a signed contract with access to signatures or certificates or keys. And that's, again, increasing. This is no longer about B2B. And anything that goes to C truly has scale by definition. The last point I'll make, and then I'll turn over to my panel, is my favorite topic these days that I'm reading a lot about and learning about, which is dynamic discovery of APIs. And that leads to the true democratization. I don't know if you've played with or heard of Bricken.io, but this whole space is really hot between what RBI is trying to do in the India ecosystem with FinMin and with a number of fintechs coming together and really collaborating and developing sector-specific and sector-agnostic standards for dynamic discovery of APIs. And because these APIs are external and publicly available, in my view, that's a true democratization. So my storefront, whether I'm an entrepreneur in a garage or whether I'm a SVP of a Fortune 200 company, it's a level playing field. And that's beautiful because that ultimately creates value to the end customer and creates a much lower or zero entry barrier for somebody who's intelligent and somebody who's creative and ingenious to create that value. So let me stop here in the interest of time. And what I'm going to do is sit down and have a conversation, free-flowing conversation with my fellow panelists, and then hopefully leave some time for Q&A. Thank you. Is this okay? Is this working? Yeah, can you hear me? Okay. All right. Amar, let me start with you. Right. So, first of all, do tell us a little bit about yourself, and then if you could talk about what trends do you witness in your industry, right, regarding open APIs, and how are brands using this either in our sector or across sectors for enhancing customer experiences?
Sure. Thank you, Sachin. So first, I wanted to thank the two gentlemen here who, while you were running the show, did the changing the wheels of the tire while the car is moving. The gentlemen who set this whole thing up. So thank you to them. Quickly about myself, I've I've been active in consulting long time ago, technology space throughout, and been involved in running and managing India-based operations for mostly North America-based organizations. So I've been in the open banking space last 5 years, part of Mastercard family now, and delighted to be here. So I think Sachin gave a fairly concise and insightful definition of what APIs are. So I want us to think of a kind of extend that thought. So essentially, if you look at APIs, they are digital building blocks, and to your specific question, that can drive customer experience. Okay, as far as so one, not only can they drive and define customer experience, they also foster partnerships, can help grow business through the creation of new business models. I think the trends we are seeing is financial service companies and fintechs, through the use of open APIs, are using customer permission data, feeding it to their apps, and this is helping them take the solutions and services to the consumers and businesses who are in need of those for a better customer experience. That's the way I would summarize that. I think just to add a little bit of a color commentary, if you look at the financial institutions, what they are able to do today through again the use of open API is provide the consumer permission data to third parties, and now their consumers are able to make some certain decisions around or have better experiences. For example, simplicity of account opening, or making payments which are more seamless, or managing their money. Small businesses, as an example, are now better able to prove that they can pay back a loan because they now have the data that shows that they are creditworthy, and that puts them on the radar for better credit. And they are then able to manage their businesses better and effectively. So that's the way I would kind of briefly summarize.
Very well put. Thank you, Amar. So, Vinay, if I can come to you next, where do you see, and do tell us a little bit more about yourself first, but where do you see the industry going in terms of development and consumption of APIs?
Thanks, Sachin. Currently I'm just, I call myself a data guy mainly, but data has become a title for me, but mainly I'm a journalist. I've done quite a lot of work in various areas. I think I was talking to one of the gentlemen who just recently had a presentation on clean water. Data engineering has been a passion. That's my primary job at Western Union. I lead a practice and we do a lot of engineering work for risk and payments area. And I'll talk a little bit more about some of the use cases that we drive. Along with that, my secondary role has been driving some of the key initiatives for Western Union, and banking has been one of those, and that's why I'm here today to talk about. Now, in terms of the opportunities, I think I have seen quite a lot of opportunities in last 2 years specifically. API and digitization, I think you can't separate these two out because API is the foundation for your digitization. Now, when you talk about faster time to market, I think if you have a solid foundation of APIs, I think that really gives you a cutting edge. Partially, I think this market is completely driven by regulators in some of the countries, and some of them are completely driven by the market. I think India and US are the two markets where it's completely driven by the markets. Europe, we have already seen the open banking with PSD2 implementation. But those are, at least in the financial world, those are the ones which are driving the consumption of APIs. Earlier, if you remember, we used to talk about platforms and channels, or rather products and channels. They used to be combined together. Now we are talking about creating separate channels and products, and selling channels which are not really owned by you and are completely driven by somebody else, or driving some of the products on your platform which are created by somebody else, right? So it's probably I wouldn't say it's a beginning, but we are at the middle of it, and it's going to continue to grow. I think one of the numbers, I think in terms of numbers, I've seen that one of the leading API management companies said that the growth is about 35% till 2025. And that many takers are there for API management today in the market. So it's a wildfire, and I think it will continue to grow.
Fascinating perspective. Thank you, Vinay. I mean, this point about channels, products, and platforms, and that distinction is a great insight. Let me come to you, Vivek. Do tell us a little bit about yourself. But given that you represent CITI, which is really a global brand, and in India, my question was, what are the top challenges faced by Indian fintech industry as far as open banking journey goes, and then how do you accelerate that journey? And in your mind, which sectors, including financial services sector, are at the forefront of sort of leading this journey?
Hi, thanks, Sachin. So, firstly, a little bit about myself. So, I've been very lucky to be involved with the API digital landscape for almost more than 10 years. And I think I started with banking, but then I spent a lot of time with e-commerce, retail, and top e-commerce players in the world. And I think that shaped up a lot of my thinking and thought process around what happened beyond that. And of course, last couple of years again came back to banking and financial services to kind of continue to evolve. And I think I'm a student for life, so I'm still learning. Not that I'm an expert on this, but I've done so many mistakes that I can tell you what not to do, right? So that has been the real education in this entire topic. Now coming to your question, Sachin, on what are the key challenges from an India perspective in the entire API landscape? I think there are a couple of things, and I think as Vinay kind of also called out, India is one of those places which is very market-driven. But what they're trying to learn with Europe and everything else is that how to get tighter with regulations. And I cannot avoid the topic of regulations if you're talking about banking and APIs and open banking and open finance also, because that seems to be really causing a lot of challenge in terms of trust, confidentiality, data, and also the entire collaboration piece kind of takes a little bit of backseat at times, because then you're, the whole topic around, improving your own systems and your own, challenges, and then trying to collaborate along with the other challenges from the entire ecosystem becomes a real challenge for the entire industry. And I think there are very good examples of some of the fintechs and banks, and including CITI, I think has been trying to make that change in terms of, and this is more of a mindset change to me rather than a technology change or a process change. And I think if you look at simple things like payment services, and I think they are leading the example in terms of how to change some of these things, right? I mean, if you look at the number of payment APIs today in India, I think they're a real example of how some of the other things can follow and kind of take a lead on that. And of course, it is not going to be easy because, now we have the data regulation coming in India also, right? I mean, making it very, very tight for us. And the whole challenge about, the global banks in India and the Indian banks and then the Indian fintechs and the global fintechs. So they all have their own set of challenges to deal with more locally and globally both. So I think converging all of those challenges and continue to make progress will continue to be a challenge, but I think I'm very upbeat and positive about the environment, because there are a lot of people thinking differently right now, right? And I think the whole digital landscape, and to me digital, API is one of those levers in digital. So I have a couple of levers I talk about all the time is UI, UX, API, data, and DevOps. So what API has done is, it has got everything into the limelight, right? And I think that is now internally challenging all the organizations. It is now creating a marketplace standard. It is kind of fostering that collaboration which you talked about across the board. And I think everybody is thinking that let's not solve the problem for ourselves. Let's solve the problem for ourselves, but then make it a solution for a broader industry, right? So I think that mindset is really changing, and I'm very, very positive that we'll see a lot more innovation, lot more, and I would love to see a place where everything becomes in marketplace, open banking, and API. I mean, the true vision is that, and I think there's a lot of good work being done in that space.
Fantastic. That was packed with a lot of insights. And as you said, it's the balance, Vivek, I think, between complying with the regulation in, as an enterprise, but also finding that time to collaborate, into the ecosystem. So thank you. I'm going to change the sequence because, I think this will flow better given what you just said, Vivek. So Amar, back to you. How is open banking driving that innovation that Vivek talked about, at Mastercard? And talk to us a little bit about how are you partnering with the ecosystem players, kind of as a nice segue from where Vivek left off.
Sure. So one, open banking is driving innovation all around across the world. Okay. The way Mastercard is approaching it is using innovation to offer more choices. So choice is a key word. I think let's keep that in mind. So essentially, we are building a financial data network where by putting the consumer and businesses at the center of deciding how their data gets used and where it gets used, they are then able to make those decisions, and this enables their access to services and solutions being crafted by industry entities, fintechs, and that inherently again benefits the consumer who is right at the center. So I think that's the whole thing about choice. When you think about choice, one big part of that is to partner or to work with partners in the industry. So one example I can give from a Mastercard standpoint is we have just earlier this month we expanded the Mastercard Engage program, which essentially expanded the partner network to now include open banking services. So what that does is consumers and businesses now are able to get or benefit from third parties who are building these solutions using their permission or consumer permission data. And what that does to the consumer is it gives them choice to better manage either their finances or for businesses to manage their business. So again, choice becomes the key part there. The one other example I want to give from an innovation standpoint is earlier in the year, in the US geography, in the payment space, Mastercard launched a smart payment decisioning tool. And I just want to take a minute to talk about it. It's kind of exciting. Is by using real-time bank account information, which is again permissioned by the user, but by using that real-time information, payment originators, so we are talking about merchants, banks, digital wallets, or payment service providers, they are able to, using our payment success indicator, but they are able to assess the balance information and determine the level of risk associated with that payment completion. And using this risk score, the payment routing optimizer is then able to recommend an optimal day and the payment rail as well. So whether it's a same day ACH or a next day ACH for better success with the, or higher level of success with the payment transaction completion. Right, so I think with what this does is, again, the information that is, or the data that is permissioned by the consumer or the business at the center really ends up benefiting the ecosystem. So in summary, what I would say is, if you talk about innovation or the approach that Mastercard is taking for innovation, it involves one, building trust. That is paramount. It's about stewarding the data. That's the word I would use. And then on top of that, you're providing the choice. So I think this threefold kind of an approach towards innovation kind of helps us get there.
Wonderful insights. Thank you, Omar. Let me stay with the ecosystem piece, and Vinay, let me come to you. Another angle in the ecosystem is being part of a cross-border payments organization, Western Union. What are your thoughts or benefits regarding the API ecosystem? And then how are you taking advantage of this at Western Union? What role do you play as you assert your part in that ecosystem?
Yeah, so as you know, Western Union is a brand which is known for 170 years, right? That also means a lot of legacy that we carry. Not only legacy in terms of the brand, but also in terms of the systems that we carry. We deal in 200 countries, so it's one of the #1 companies when it comes to remittances. Last 2 years, pandemic actually changed the game for us. We were 90% relied on our retail network, 10% digital was catching up for us at that time. we realized that the worst hit was our retail network, and we wanted to get back in the game, increase our digital presence, and at the same time continue to build new revenue source. And if you look at, traditionally, if you look at remittance as a pattern, it's a very transactional based, right? So there's no customer stickiness there. We always had a license, a banking license in Europe, and we said that why not utilize that to launch a bank? And this whole journey actually started with a small MVP, and then we built the bank within next 13 months. And if you look at the journey, building a bank in 13 months, a company which is a remittance company, has no knowledge of banking, but launched the product within 13 months, allow, or rather create a basic savings account multi-currency account with 16 currencies in it, debit card feature, also money transfer, global money transfer as a service. I think it wouldn't have been possible without the APIs or the ease of integrations that you can do today, right? That also needed revamping of our loyalty programs, our rewards program, everything. So when we wanted to launch the bank in Germany and Europe, that was the first stint that we did. We practically figured out that what do we have currently available that we can utilize versus what is it that we need to really acquire. Money transfer was an easy part to integrate because we have been integrating it with our partners for a very long time. Banking, we need AML compliance. We need sanction screening. We need PSD2 compliance. We need core banking engine. All of that today that we have is either a SaaS product. We have integrated it with some of the leading technologies which are out there. We have also integrated with aggregators who will give us a simple solution like checking the current account balance in some other bank which you need to transfer it into your multi-currency account, or you want to use that money for remittance. You use the aggregators, and it's all API. And as I was playing that part, and it was something a very new stint for me as well. It was phenomenal. I think the way we leveraged this whole ecosystem, I don't think if we wouldn't have had this, it was impossible to launch a bank within 13 months, and with a tight budget and timelines that we had.
That is incredible feat, and congratulations to your team.
Thank you.
Vivek, what's in your experience are some of the right API strategies that add significant business value?
Sure, I think that's a very loaded question, but I think API at the heart of everything. We need to understand that it's not tech, it's not a business problem, it's not a business process, it's not a requirement coming from anywhere, but it's a motherhood of everything, right? And I think you must have heard the term called API first strategy, right, all the time. And I think people speak about that all the time because one of the reasons is that it has shown us the way, and as I was talking about earlier, right, the digital levers, it has shown us the way to really look at any business function, any key capability from a integration, collaboration, distribution, and experience perspective to commoditize. And to me, that is the crux of everything because you're able to do that in a way which is, for first time actually I've seen something which is so standardized, right? And if you look at everything else before that, whether it's, the web, 2.0, 3.0, anything to do with internet or data or anything from a cloud perspective also has been very, very disparated. It's been, there's no one thing which has come together and kind of everybody nodded their head and said, yes, this is the way to go, and that is the whole foundation has been the collaboration itself, right? And the second thing which is changed big time from an API strategy perspective is monetization. Now, this was a concept a few years back. Everybody used to think, connecting one thing to another is an API. Then they said, it's not just that, we can, start, reusing a lot of this stuff. We start building, doing a domain-driven design and start, making sense out of it's a business function. It's not a tech thing. So there was a lot of evolution, and then came the final boom, right? Then came Google Maps, then came, all the cool stuff which is, integrated today which has changed our world completely, right? One single thing which, through the entire, sound navigation system out of cars was Google Maps, right? I mean, it is still one of the, and I'm taking a non-fintech, non-banking example because that is where a lot of these things erupted, right? We started looking at not just as a ways and means to, share, build capabilities, to collaborate and also monetize them to a great extent. So and that's where fintechs came in, right? I think they started to change the way we think, and I think there's so much to learn from the e-commerce world, right? I mean, the Amazons and, the Flipkarts and the Walmarts and so I was, part of one of them in the US, and I think they started looking at the supply chains very, very differently, right? And they started looking at marketplace as a way to, completely change their business models. So this is where, and I'm calling all this out because these are the factors which go in what shaped the API strategy today, right? And if you look at right from, building to scaling to collaborating to distributing and even monetizing. I think today, if you look at open banking as an example, everybody is trying to monetize, build it for once and then monetize forever, right? I mean, type of a strategy. And I think why it is a game changer because understand the environment we are in today from a banking perspective, that heavy investment, heavy effort is being spent on, and redundant effort in my opinion, because every bank is trying to solve the same problem, right? Every ecosystem, and the problems are pretty common. I mean, and if I take the biggest of them all and keep speaking about this too much now, is the regulatory one. That, that's a great example where you can actually think of it as a unique problem across the board, which is unique to the industry, but not unique to every other player. So you can take that as a use case and start building your API strategy around that. And I think CITI has done that in a couple of countries in Asia Pac, and I think very, very successfully, and it is even featured in the press and some of those areas where now from an API perspective, we are completely open in that stand, and I think there are a lot of players who are collaborating with us to leverage those capabilities and not and gaining a lot of efficiency, lot of time to market, to scale, and I think focusing on what our core businesses are, right? Sometimes we tend to do too many things around our core, and I think that dilutes the focus and the priority around it. So I think some of these things, and the most important thing to me from an API strategy perspective is data. Right? And I think I cannot again not talk about data when in context of APIs. So what is also changed is that the way we look at data, the way we use data, and I think to us, that is the core of what is, and the evolution and maturity of the data model, data strategy is also one of the areas which has resulted in people a lot more open, lot more progressive about this thought. And again, not thinking within a scope of an organization, but thinking in scope of the industry itself. So I think that's my few cents.
Thank you, Vivek. I see a lot of nods in the audience, and you said upfront that you have spent time in retail industry, and it's obvious how you're taking those insights and applying that to financial services. That's great. I'm conscious of time, so I'm going to do a rapid fire round, just one question. Look, in events like this, when anybody talks about, or any panel talks about a rapidly evolving space, it's usually a very rosy picture that gets painted. So I want to end on a note of, obviously there must be challenges, obviously there must be risks, and obviously there must be glitches with any rapid evolution. So I'll go in the same sequence. Amar, what are the challenges in open banking API integration? And let me ask the three questions up front, right? Vinay, for you, with open financial data transactions becoming a trend, what are the risks and how can companies mitigate that risk? And Vivek, I don't have a specific question for you, but I want you to have the last word. So rapid fire.
Okay, I'll keep it brief. I think the one challenge I will highlight in the interest of time is the lack of standardization when it comes to data access and data formats. Vinay and Vivek both referred to the Indian market where the open banking evolution is very market-driven or demand-driven. There are other geographies where it is regulation-driven, and then there are others where there's a mix. So the challenge with standardization, the level of intensity of this challenge varies based on whether that particular geography is demand-driven or regulation-driven, right, naturally. When we talk about API integration, there are multiple parties. There is typically the financial institution providing the data via the API, and then there are the consumers. There are the industry entities or fintechs who are using that data via the API. And how the priorities or the prioritization of resources to integrate the APIs lies on both sides matters. Because if that priorities are not aligned, then you have situations where things can get dragged and add to the challenges. I think the key is how to develop an API once and not have to keep redoing it because of unknown factors such as the partners or the other entities. I think the one last point I will also mention is we need to think about not just plugging into a data source or an organization that provides data, but is the organization able to provide us enhanced and normalized data, which is more actionable? I think that's a question I'll leave you with, because with, for example, what normalized pay data or entity recognition or such things can do for you in terms of actionable items, actionable data is immense.
That's an incredible point.
And the risks are the obvious ones, right? Because we are talking about not the open APIs, but the open data APIs. That means we are talking about issues related to AML compliance, sanction screening. Now you can do that on your side when you are in control of it, but as soon as it leaves your boundary and goes to somebody else's hand, that becomes a major challenge. Now, when you are signing up the contracts, I think that's where you need to make sure that they comply to some of these FIIs or aggregators who are the consumers of your APIs. We need to make sure that they adhere to certain contracts, certain standards. That's part number one. But part number two is internally as well. I think you need to ask your company to invest money into technologies which will allow you to do real-time transaction monitoring on a heavily basis. Third one would be to make sure that something around logging, right? I mean, we do logging only for our own consumptions internally. I think that's something that needs to be done across the board. I mean, even if it's something where your FIIs are accessing the way they are accessing your APIs, or your aggregators are the way they are accessing your APIs, you are practically monitoring through your logs in terms of how the usage is done. I think that's the only way you can de-risk it. I know that there are a lot of SaaS vendors now which have cropped up, which also take care of some of these risks, and they can mitigate it for you. Similarly, I think crypto opens up a completely different risk area, and I know. I mean, I think there are a lot of companies which are also cropping up to de-risk that part where you can buy and sell cryptos. But I think it's as we grow in it, I think we'll learn from it more. There's no perfect solution at this moment, but I think some of the ones that I mentioned is the immediate ones that you can take care of.
Very practical and pragmatic thoughts. Vivek, last word. Anything that you want to sort of share about challenges and risks and how we are mitigating them?
Yeah, so I think especially from a bank perspective, risk is one area which is probably top of the agenda all the time, right? And I think that is also one of the reasons which is the pace and progress of the entire API economy has been slower in this industry versus other areas. And I think things are opening up a little bit. I think there's a lot more appetite to take that risk and kind of start collaborating. And to Vinay's point about the security layers, the confidentiality of the data distribution itself, the channels and the mechanisms, I think, are going through a lot of evolution right now. And this is fundamentally the same challenge as we had in cloud, right? I mean, everybody, there were players who jumped on it, and I was also lucky to be part of one of the first enterprise scale cloud implementations back on those days, and this was a core tech organization. But I think, very, very fundamentally a very similar challenge, right? I mean, now the challenges we are talking about, cloud, blockchain, crypto, 5G, metaverse, but think about the building blocks end of the day, right? I mean, building blocks still remain the same, right? I mean, they haven't changed a lot. So I think the companies have realized now that this is not about running after the buzzwords, but making sure your core fundamentals in terms of, and opening that up a little bit from a collaborative sense. And I think we also don't look back the open source examples, right? Apache Foundation, or, what Netflix is doing, or what Facebook is doing as exposing all their APIs and actually helping our build a lot of these solutions much faster, much efficient, and we have been doing this for years, right? I'm sure all of us, in some form or shape have done that. So, I mean, those are great examples, and we have to learn from there and have a lot more risk appetite about, venturing and trying these things out. And I think moment we start doing that, and if you're not comfortable doing that, we should tie up with fintechs, ask them to shake us up, right? And try some of these things, because I think that is the only way to kind of, get over some of the challenges, I think, which both Amar and Vinay kind of talked about. And I think this is also about the competitiveness in the industry. So this has become a competitive advantage today, right? I'm not going to go into monetization again, but then the point here is that the more open, more distributed, and more efficient you are, you're better poised for success and growth down the line. And I think I can't find a better way of describing what APIs bring to you on the table. So thank you.
Thank you. And I'll take you up on the challenge of shaking you up as a fintech player. So look, I think this session was till 11:50. I definitely want to give you guys the opportunity for Q&A. So I'll keep my closing remarks to an absolute minimum. But it's been a fascinating conversation. I learned a lot from all the three of you, and you've given me a lot of food for thought, as I'm sure audience have taken a number of key takeaways. But if I have to summarize, I sort of heard three themes. One, the first theme was all about the marketplaces and ways in which applications, services, solutions get extended to create net new revenue stream, crashing the time to market, and creating ultimately customer value. The second thing I heard a lot about was the choices and the richness of consumer experiences, and of course all the different ways in which we can tweak the API strategies to meet both the regulatory and other challenges. And then the third piece that I heard about, I think, is a new set of entrants that are coming into this whole space, whether that's the API-first challenger banks, or whether that's new sectors like retail, or if I might add, telecom and healthcare. And then the last piece is aggregators that I think, Amar, you talked about coming together. And I think this whole place is going to evolve with all these new entrants. So with that, let me stop there. Do we have time for questions, guys? 5 minutes? Yeah? All right. So let me open this up. Anybody can just raise the hand, ask a question, and then I'll just let the audience, depending on who wants to respond, we can answer. Go ahead, sir. Sure. Sure, that's fine. I'll give you the mic.
Hello. Hi. My name is Milind. I'm from Tietoevry. And thanks a lot. It has been a wonderful session hearing you all. My question to you, it's to you, Sachin. You mentioned about dynamic discovery of APIs. So could you please elaborate a bit on that, maybe in 2-3 minutes, just to summarize what exactly we mean by that?
Yeah.
Thank you.
So it's really about having the APIs that are publicly displayed, but also creating an ecosystem where there is awareness around those APIs, and in a way that completes the ecosystem, right? So essentially, if you're talking about healthcare, and let's say there is a use case where you're going to a hospital and you want an upfront payment before your cashless a facility becomes available, there is an underserved market there. So first of all, there has to be a customer pain, which exists, and I'm talking from an India context. How can the healthcare industry come together We talk a lot these days about BNPL, buy now, pay later, and there are fintechs and then there are financial institutions. How can these three different players come together and solve for this particular problem so that the patients and their families who already have insurance can actually get that admission without having to shell money upfront? Can there be a counter at the hospital admissions? And this is just one use case that I thought of in response to your question, Vinay. But the point here is this dynamic discovery of APIs is going to allow an end customer or end consumer to look for what are the alternative solutions available for a particular pain point, which is frictionless. The other best example is how RBI or how FinMin is now distributing money without a ration card, with the help of a QR code, or even with a feature phone in rural India, in a way that is frictionless or seamless, right? So these are examples where you're democratizing information and you're allowing a big corporate as well as a small player to solve for a known consumer pain. It's a longer conversation.
Hi, this is Amit, and we talked about the API and all. I just want some inputs on the security part. When we talk about the API strategy, how the security is taking into consideration. I'll just give you a few data points. I was just going through an article and it's saying that the API attacks rose by 700% recently, and this is a data from TechZone Europe. Which is talking about the attacks. And it is so vulnerable that they are a huge target for the cyber criminals and everything. Talking about the vulnerability, security is always part of the strategy. But then the strategy needs to change the more we are going ahead. So how exactly we are taking care as of now? Yeah.
So Atul, right? Amit. So Amit, that's a great question first, right? This is actually a big topic, of discussion across the board, and it's been there for a while, right? Now I may not give you an exact, technical answer for this, but the real problem here is not just the security, but it's around the security, right? I mean, it's about the exchange, it's about the data, it's about the encryption and the service contracts, right? It's about where are you really hosting your services, right? I mean, is it like on the cloud, it's on-prem, it's private? So it's a lot of moving parts around that. And the hacks which you have talked about, and I've heard about them, we have in our ecosystem also, we have had hacks, on our APIs also, right? But what we need to understand is that security is not just the concept within the API, right? I think security is concept around the API also, right? And I think one of the things, and those are fundamental issues we already have, which we need to solve outside the API ecosystem itself, right? And it's not, and almost 90% of them fall in that category. Yes, there are 10% of them which are part of the API design, part of the API security layer, but it's lesser of that and more of everything else, in my opinion.
Yeah, and I think just to add to that, I think earlier I mentioned that, the logging part of it, that comes out of necessity because, no matter what you do, I mean, security is good, and you'll still have 7 or 8% attacks, right? Now you need to have that second layer of defense somewhere that you track that there's a bad transaction. Somebody is messing up with your data, right? And that's where you build the whole logging mechanism to monitor whether, you have to have these real-time monitoring systems in place to make sure that there is no, intrusion that somebody has done in your systems. That's the only way to prevent it. As Vivek said, that I don't have an answer to how you can prevent the attacks, but creating a second layer of defense is something that's absolutely necessary.
So I probably missed one more point to add. So we have this whole API integration layer, right? I mean, you have the experience, the integration, and the domain APIs, right? So that integration layer is also gone through a lot of hops, right? I mean, there's good market players in the industry, like APG and, all of them. And I think what they're also figuring out is that how to tighten that entire secure layer. So there are 7, 8 layers of security, right? I mean, right from your application to network to, so I think some of those layers were exposed as part of the API, openness. And I think some of them, like running it on public cloud, exposes you even more, right? I mean, so I think some of that exposure has happened because of the way the whole thing is architected. But I think there's a lot of work which is now happening on, and I've worked with some of the, some of the fintechs actually who are working on the security of, microservices and APIs. And actually they have done a tremendous job in terms of, figuring out what the hacks are, how to avoid, DDoS attacks, vulnerability. And I think, and addressing, because all 7, 8 layers are not addressed right now as part of that. So I think there is a lot of room for improvement right now on that. A lot of work is happening. I know a couple of startups who are actually focusing on this. And I think I do expect that things will stabilize. And to, Vinay's point, hacks of 8 to 10% is normal nowadays, right? I mean, anything which is exposed outside, even a simple, microservice on a VM today, or site rather container, Docker container, they're exposed on public cloud. So it's the same problem, but it's amplified because APIs that you are exposing, the impact is a lot more than anything else. Sorry.
And I think one last thing, if I can add after Vinay and Vivek, is from an organization culture standpoint, how do you build that trust in the marketplace for your brand or for the domain? And I think that's where the innovation and the speed with which you want to go to market and how you balance that. So how you balance the speed, the cost, and the risk becomes key. You put security at the center of what you do, but that does mean that some practices which could have taken you to the market sooner, you will have to put the brakes on so that you are able to keep security at the center, and that kind of from a cultural standpoint has to be part of the entire organization. So that's the only.
Fascinating. We are, I think, on the top of the hour almost. So any other questions? We can take one last question, I think.
Hey, thanks for that wonderful session. It was like we got beautiful insights about APIs. So
thank you, ma'am.
The question that I have is, how do you foresee the API management when it comes to embedded finance? Because we talked about open banking, and you touched upon healthcare also. So I come from a healthcare background, providing solutions to healthcare industries. So healthcare organizations currently, they think and they believe that the embedded finance is going to change improve their operational efficiency, and it's going to improve the ecosystem tremendously. So I would like to know about how do you foresee the strategy for that, API strategy?
Sure. I think Amar or Vinay might be best equipped to answer this.
So when you say embedded, are you talking about
integrating the different finance solutions from the financial partners, tech solutions, to the healthcare organizations,
okay.
right? To
So,
any non-financial organization.
Okay, so I think if you remember, I talked about the platform, product, and channels, right? When we talk about decoupling and recoupling again, I'm not talking only from the financial systems, right? I'm also talking about, say, for example, if I want to do a personalization around customer, I can actually do that with irrespective. Say, for example, in my financial product, I want to have something which is embedded, maybe maybe insurance products for healthcare, or anything, something which is not basically part of my financial world. I could do a lot of embedding from external parties as well. I think one of the examples that I recently saw was around musicians, right? And musicians in the financial world. And if I have to customize it for a musician, the way I would look at it is, I'm a singer and I'm selling my music on various platforms like Spotify. I'm selling it on Google Music. And now I get some royalties back into my account, and all I'm doing is I'm integrating APIs from all of these various vendors into my banking application so that I know exactly how I received this money. So I know the flow of income into my own world, right? That's just one example, but I think you can probably similarly related to your industry as well, there's definitely no dearth of use cases that are around, and I think it's just more of an imagination of what you can do, and you can integrate those in your ecosystem as well.
Let me add to this. So again, my background is banking really, but if I think of healthcare, I think of 3 Ps, which is the patient, the payer, and the provider. Provider being, the hospital or healthcare provider. And that really is the ecosystem, right? So I see the industry, your industry, go from episodic illness management to proactive wellness management. And I think that's where the biggest use cases are in terms of how do you proactively monitor the data of the patients before an event happens. And then when you start to see some outliers in that data, how do you get people either closer to a doctor or to a telemedicine advice, or get the doctor to the patient, depending on whether you're talking urban or rural. So that, and all of these 3 parties are invested in that. Patient, obviously, because they don't want to have an invasive procedure. Payer, because, it's easier for them to, 1 stitch in time is better than, 9 and all of that, right? So it's easier for them to take care of the wellness of the patient. And finally, for the hospital, they would rather have a lot more customers that are healthy on a plan, working with them through the insurance or through the payers. So it's that space, I think, that if you look at, so I'm not thinking about it, the traditional operating theater and pharmacy and the hospital management, but I'm thinking about the whole ecosystem of the 3 players coming together for the overall wellness. That's how I'm thinking about it.
Thank you.
I think they're going to close.
Thank you so much. I'm sure I
Thank you.
represent everyone here when I say this was a very, very engaging session. To thank you for your time and valuable insights. Nasscom has planted a sapling in your respective names. We would like to present you with the certificate for the same. Mr. Sachin Kulkarni.
Thank you so much. Thanks for having us. No, thank you. It's a lovely platform. Thank you. Thank you. Thank you.
Thank you so much. Just bear with us for 5 minutes while we get the stage ready for the next session, please.
Thank you so much.
Thank you. and how technology is playing a key role. I would like to invite the speaker on stage, Mr. Satish Padmanathan from Tietoevry. Mr. Satish, please. He is Head of Product Engineering, Payment and Messaging, Tietoevry. Over to you, the stage is yours. Yeah.
Do we have a presentation?
Presentation, this is the one.
Wonderful. Yeah.
This is your presentation? PDF?
Yes.
Second why isn't? It's there. Yeah?
Wonderful.
This is the click.
Good afternoon. I'm very glad to be here talking about a very interesting topic. It's also an interesting hour of the day. We're just about to, get into lunch in some time, but I'll try to make it very interesting and very short. When I got this topic from Nasscom, I was trying to really wonder about the word deciphering, right? I mean, I want to confess, I kind of went into my dictionary to look at what it is, because I intend to make it very simple, easy for everyone to understand. And when I looked at the dictionary, that's what it said. It's kind of decoding and making it simple. So I'll try to make it very simple for all of us to understand. So this will certainly not be a masterclass. I'm here to share what I know and our experience working with some central banks in the Europe on their digital currency pilot and different programs. Yeah. So without taking much time, I'll actually go into the topic. We will start with understanding how money is created. Again, making it very simple for all of us to understand. Yeah. So money is generally created in two ways. 3% of the money is created by central banks. They mint and print money, right? I mean, we have our coins, we have a currency that goes into the distribution, into the ecosystem, right? And the second way of money creation, it's about 97% by banks extending loans, credit to businesses for personal use, and then that comes back into the system through interest and repayment, yeah? So this is how money is created today. What we're going to focus on the first 3% of how money is created today, and what is the alternative, what is the future of cash, which we call as cash 2.0, yeah? I also have a bit of a picture to show how money flows into the system and how it comes back into the system. So up here you see the central bank prints cash, mints coins, and then that goes into the economy for usage, right? I mean, through banks or through different channels. And then you also have the commercial banks, which kind of extends credit, loans to different businesses, individuals, and then that comes back as loan repayment with interest, right? There, you kind of add the money which was created. But recently, the past few years, we've also seen government inducing a lot of stimulus into the economy. We've seen COVID taking a hit on businesses. So governments has introduced trillions of dollars the last couple of years to kind of keep up the economy back rolling. So this is how money is created, yeah. And then if I kind of also go into types of money, not all money is the same. They're very different, right? And there's a small picture of showing how different they are. So central bank money, which is the most stable, it is kind of the claim, the liability is on the central bank, which is basically backed by the government. So something that we can all trust, right? The second type of money is money from the commercial banks, right? I mean, you have money in your account, in your wallet, and so on. And then we also have e-money, like your Paytms, your Airtel money, like the Oyster in UK, PayPal in US, and so on, right? What is not money is something very important for us to understand, and that's exactly what we're going to talk about, digital currencies supported by central bank. Public cryptocurrency is not money, right? I mean, earlier today, we had some speakers talk about NFTs, right? So digital currencies which are not supported by central banks are not money, and they're not stable at all, right? And then there are some stable coins like Facebook in the past, they came up with something called this Dime, but then now they've decided to kind of close that program because it's not working for them. So we now understand what is actual money, different types of money, and what is not money. And then if I go into the money flower, I mean, this is, again, a very popular picture most of you should have actually seen. There are four very popular categories, in the money flower. One, the accessibility, what form of money we have, digital, physical, who is issuing the money, and how do you transact? It's like peer-to-peer, business-to-business, business-to-consumers, and so on, right? And then in here, we're going to focus on three important things, which is of our interest. Number one, which is, Number one, which is cash, paper, coins, which is funded, or which is kind of, the claim is towards a central bank, right, that you see in here. And then retail CBDCs, which is value-based, which is more like, a token-based. You don't really have an account to track it. And then retail CBDCs, which is account-based, which is very similar to your banking checking account or the saving account, right? The reason I want to show you this picture is because it's very important to understand when we talk about CBDCs, the different type of CBDCs and what it really means, and that's exactly what I'm going to talk in my next slide. Okay, let's kind of start about why do we need a digital cash? Okay, people can talk about we have financial inclusion is much better in today's world. People are using accounts, but why digital cash, right? Different central banks in different parts of the world have different problems. For example, if you talk about India, right, I mean, we still have 50% cash usage. And for the central bank to print cash and mint currency, it's a lot of money, right? For example, we still import the ink needed to print our currency, right? The metal needed to mint our coins. Not that it would kind of, heavily impact our current account deficit because we are importing, but still it has a larger impact. I mean, for example, India wants to reduce the usage of paper cash or coins, right? If you look at Europe, they have a different problem. There's very little use of money, right? And then they want to kind of somehow still have some liquid cash in the market and not just in accounts, because they also have different problems, because not everyone has an account in some part of the Western world as well. For example, people who have immigrated, refugees, migrants. So there are different problems to solve in Europe, and that's exactly what I'm going to talk in here. You look at the cash usage. Norway is the one which uses least cash, 3%. In India, cash is still king at 50% of our usage. Of course, it has changed a lot in the last 2 years, after the demonetization, during the pandemic, but it's still one of the highest in the world. Again, there are still some countries like China and US which are still using a lot of cash, but kind of we lead the way with 50%, right? And that's when I said the central bank wants to reduce the usage of cash. Okay, not if all through the accounts. It needs a different channel where they can, have free flow of cash, but in a digital way, yeah. I kind of briefly touched upon this. I also did not cover some points in here. Like I said, in Europe, some kind of countries want to address the decline of cash, right? I mean, because they have different problems today. And then it is also about, in a way, take back some control in the monetary policy. Today, some of the central banks feel that with a lot of stable coins in the market, with PayPal, with challenger banks coming in, they're losing control over the cash circulation in the market, right? So it's also going to be a struggle between the central banks and the commercial banks, because some of the banks that we have spoken to in the past 2 years, they're not very inviting to this idea of digital currency. They feel that their dominance will somehow be reduced, because when coins supported by the central banks come in, probably it's going to kind of increase the circulation of digital coins, because it's very easy. You don't have to probably carry a lot of cash in your wallet. You don't have to really withdraw money from the ATM. You can just use it as tokens, right? So it's also another dimension of financial inclusion. Like I said, India, the financial inclusion has improved, but there are still countries like Africa where there are still a lot of people which are not in the banking ecosystem, right? So in a way, digital currencies from central bank will also bank the unbanked, right? Of course, there are multiple reasons for people not to be in the banking ecosystem. Like I said, okay, someone which have just migrated out of a warred country, they don't have the needed documents to kind of open a bank account. For example, Ukraine. A lot of refugees have come out of Ukraine to different European countries, right? And it's a real challenge today. They don't have cash. They don't have cards to buy something. So it's going to solve problems like this, like a central bank digital currency. You can just go and, buy it online, with whatever you have, right? I mean, you can just go into a retail shop, buy some digital coins into your wallet. So it's going to be very easy. So, and that's the financial inclusion that I want to cover. And then central banks also wants to kind of, in a way, reestablish. Okay, today none of us bank with the central bank directly. You always need an intermediary bank or the commercial banks. So they want to kind of, open direct channels with the consumers. Like all of us, who kind of want a bank account, right? I mean, you can directly have channels with the central banks to kind of buy digital currency and also probably, exchange digital currency for actual currency, yeah. And then, yeah, now I want to kind of cover about the status of digital currencies around the world. It's very interesting to see that about 90% of the central banks are already pursuing on digital currencies. This includes 60% that are experimenting with the technology, what kind of framework they want to use, 14% which are already in the pilot phase. And this picture, it's not, okay, it's very clear there. You see, India is still in the experimenting phase, and then I'm also going to show a timeline to kind of see where different countries are. But China is already in the pilot, and US is also very close to starting a pilot on digital currencies. Yeah, I think. Sweden was the first one to start a pilot on digital currency. They started in 2019, which we were also part of. US started it in 2021, but it's not moving very fast because US, as we all know, is not so modern in their banking ecosystem. Europe is also planning for a digital euro. The pilot has started, but they have not progressed much because the pandemic has slowed them down a bit. India, by 2023, we will start the pilot, and there are also other countries which are exploring on how to start the pilot. As we speak, a lot of central banks have issued RFIs and RFPs, inviting companies to kind of come and consult them on how to decide and how to build their digital currency framework. Yeah. I want to now talk about the e-krona project we did with the Swedish Central Bank. So there were different technology companies which was part of the e-krona pilot, and we are one of those helping the Swedish Central Bank in designing their digital currency platform. So before we actually go into the actual e-krona pilot, I also want to show the design choices which is needed for any central bank to kind of decide on what technology they need, or what is the framework they want to design. So there are different factors like, do you need a interest-bearing digital coin? For example, today, if you have cash in your wallet, it's not earning you interest, right? Only when you have money in your account that earn you interest. So there are choices to make here. Some central banks, if they want to reduce the usage of cash, they may as well, have some interest to motivate people to move away from physical cash, physical coins into the digital currency. So that's very important, right? I mean, you need a technology which would, make it very flexible for you. For example, some central banks can start with, okay, interest on your digital currency, and after the adoption has come up well, they can kind of, in a way, change that. Okay, yeah, now they are no more interest bearing, right? So, and then the asset class is also important. What kind of currencies do you want to hold? Are you going to give it to corporates, or is it just for retail? What kind of technology are you going to have? Will it be token-based? will it be account-based? Because if it's account-based, there's no difference between your bank account and your digital currency, right? Because there are something related to privacy and other things to take care of. For example, if you're a tourist, you're going to be in a country for 2 months, you can't really, open a bank account. It's the same for, opening a digital currency account as well. So a lot of banks are actually thinking about, okay, should we have account-based or a token-based, right? And then there's also how do we distribute? Can it be directly distributed from the central banks to the consumers, like all of us, or should it be through the commercial banks, like how they distribute cash today? And there is also a thinking of, can we have another dimension? Should it just be the commercial banks which redistribute digital currency, or can it also be, for example, the PSPs, companies like Paytm, companies like Zettel, Amazon. So a lot of central banks are thinking also in that direction. Distribution of digital currency is a very important factor in succeeding with this concept, right? And now I go back into the e-krona pilot which we did with the Swedish Central Bank. I'm not going to go into the details of it. I'm not going to touch the key technology or architecture, but it will be on a very high level, right? So before we go into that, we will also talk about how is cash distributed, right? I mean, central banks, distribute cash to the commercial banks, and then from commercial banks, it kind of comes to the consumers, right? There's no other way. Of course, there are ways like, for example, in India, you have a lot of subsidy, right? I mean, people don't, or at least today, they need a bank account. But in the past, at least, you don't need a bank account for you to receive a subsidy. For example, you're a Manrega worker, right? Even if you don't have a bank account, you're going to be paid in cash, right? So cash is not just distributed through commercial banks today, it is also distributed to other channels, right? Which is also a very key consideration for a framework like digital currency from the central bank, because you can then start issuing digital currencies. I'll also show you how a digital currency would look like in real life. For example, China has come a long way in their pilot, right? And then this is example of a very high-level CBDC framework, and which we designed for the Swedish Central Bank. So you have the central bank which kind of mints the digital currencies, and then they distribute it to the commercial banks, and then the commercial banks can issue those digital currencies to the end users, right? And I'll also show you an architecture of how that would actually happen in practice. Like I said, a lot of central banks are also interested in opening up more channels to distribute the digital currencies. For example, it can be through the commercial banks, it can be through PSPs like Paytm, Google Pay. It can also be through government, paying subsidies and social security benefits directly to the end users, right? And there is also a discussion in at least some geography. How can we have cross-border payments implemented through central bank digital currencies? For example, in a country like Denmark, Norway, Sweden, they're very close. They all trade in krona, and their value is almost the same, right? So they're also looking at option of how do we create a digital currency framework which would help cross-border payments as well, right? Okay, if you have a kind of e-krona from Sweden, you would still be able to trade that or use that in Denmark, to buy something, right? So that's also a new dimension that has come up. And this is more like the suggested architecture for the Swedish Central Bank, how they plan to distribute the digital currency. The first is indirect, it goes through the banks. As you see, central bank is in here, and then you have like Bank X and Bank Y, which are commercial banks, and then they in turn distribute it to their end users. A direct central bank digital currency is directly issued by the central bank to the end customers. And there is also one hybrid model where you have a possibility of either buying it directly from the central bank or from a commercial bank. And here is where the marketplace will eat up, because some commercial banks make kind of have a lot of motivating factors like rewards, having some discounts. For example, if you have like 1 rupee, you get 1.5 digital currency. So I think when this comes in, the hybrid model will be very interesting to watch out. We already discussed about the design choices, and this is some example of how digital currencies would look like. This picture is from China, from their pilot. As you see, you have, you have a card which kind of holds actual digital currency, which can be punched as you use. You have more like chip-based, where you can load your digital currencies and just go tap it in any of the retailers. Or you will have something very similar to a credit card, but it doesn't have to be cleared through a network, which has a lot of fees like interchange and conversion. I think China has come a long way, and looks like the adoption is also growing even in the pilot phase. So it'll be very interesting to see how it happens in India. And we also, in Tietoevry, have a sandbox which is ready, which can work for any central bank around the world if they want to, in a way, start a pilot or at least want a demo. I'm not going into the details because I think the time is already running. The timeline of eCrona project, it started in 2016, and Tietoevry, we were invited into the phase 2 of the pilot, and we tried to build exactly this for the Swedish Central Bank, where we have all our product portfolio from payment to core to loans, and then we created an ecosystem where the banks, commercial banks, can actually provide a facility where you can transfer your physical cash to a digital cash. And it's the same for central bank. They can provide interfaces where a consumer can actually buy a digital currency by using actual currency, your account or your cash and so on. Yeah. And for this pilot, we used Hyperledger Fabric as the technology. Yeah. I have more slides, but the benefit of time, I'm taking a pause here. If there are any questions, I'll be happy to take. Yes, please.
Hi, so this is Madhu from Amdocs. So earlier you mentioned about cashless economies, that how India is at 50%. So even today, like some of the established companies or in educational institutes, for example, because I had that incident recently, where I have to pay a certain amount to a big institute in India. And they gave me 2 options, that if you pay online, it should be with GST. And if you can bring cash to a certain place, then you don't have to pay GST. So when these kind of instances happen, so like it was not expected, first of all, because such a reputed organization, they have all the register compliance, So how can, because on one side we're talking about, cashless economies, and and on the other side there are some instances, not only education institute, but if you go to hotels, or if you book a Uber also, they sometimes say that you cancel from there and you pay as cash, so that you don't have to pay that extra. So I just wanted your thoughts on that.
Yeah, I think it's an interesting point. Like one of the motivations for central banks to bring in digital currency is exactly the same reason. They kind of want to get rid of cash. It's not possible because not everyone is into the banking ecosystem, but they can, with a digital currency, you can be very flexible. Like if you have a token-based digital currency, it'll be very hard for anyone to track. It kind of gives confidence for people to kind of use it, but at the same time, at some point, you can have a lot of controls in place. For example, you can tax digital currencies beyond a limit, right? I mean, you can actually track when there is a lot of, for example, if there is a suspected transaction, you can really put some control. So that's exactly the reason some countries, including India, want to come up with a digital currency that will be an alternative of cash, which would still serve the purpose of cash as it serves today. Yeah.
Because in this scenario, 2 things are happening. First, you are promoting cash, and suddenly there's a amount of tax invasion. Okay, if I want to save tax, and that won't be much, because now it is like I'm being punished for doing cashless payment online.
Yeah, I think it's the same, not just in India. Even in UK, the taxation is very different, right? I mean, they don't pay income tax on income, but corporates pay tax on the transaction, right? So a lot of, if you have a cash and carry kind of a thing, you get discounts, right? Because, It's very open in the UK. So it's the same in every market, and that's exactly the reason why a lot of central banks want to create a cash alternative, which after some extent, they can add controls that can be traceable, that can be easily, you can have a lot of flexibility in terms of taxation, in terms of fraud prevention, in terms of what you just mentioned. If there is an evasion, you can really track that at some point. Yeah.
Yeah, sure. Thank you.
Thank you. Last question. No. I'm going to be here throughout the day, so if you have any questions, I'll be happy to have a chat. Thank you so much. Yeah.
Thank you, Satish, for being with us here and sharing your views. It was a really wonderful session. And as a small token of gesture from Nasscom, I'd like to give you this certificate of
Thank you.
sampling that we have planted.
Thank you so much. Sure.
So we break here for lunch and networking. And the next session starts at 1:40. Hope to see you all again in the room. Thank you so much. Hi everyone, welcome back to the post-lunch sessions. So we would like to start with the post-lunch innovation vitamin on Industry 4.0 with smart listening for factory, leveraging AI for sound characteristics for machines. The speaker for this session would be Anand Deshpande. He is the Chief Strategy Officer for AlgoAnalytics. Anand, over to you.
So how do I change to display? Oh, they'll do that, right? Yeah, hi, thanks. Thank you everyone, and thank you Nasscom for having me. So I will talk about a very unique area. I mean, I call it unique. It's about sound analytics in manufacturing. Or actually, sound analytics can be applied to many areas beyond manufacturing too, but here we will talk about manufacturing for today. All of you are, I'm sure, aware of Industry 4.0, and many talks happened, and there are many companies who have developed a lot of amazing technology for Industry 4.0. But there is one common challenge, and when I work with a lot of manufacturing companies, not just in India, but even in other developed countries, in Japan, in Thailand, in Singapore, one common problem in adopting Industry 4.0 is that many of the existing solutions are too cumbersome. You have to install a lot of sensors in the machine, you have to draw wire, you have the IoT gateways, then you send the data, then you have a solution on the cloud. So many of these companies say this is too cumbersome, and if something goes wrong, it's not easy to fix it. So there is I think there is a lot of market, or there is a need, or there is an opportunity to develop what we call non-intrusive, non-touch IoT solutions, or non-touch technologies. And an example of that, we don't often think it that way, but the example of that is vision. The reason the video analytics or the image analytics is so popular is because it is non-touch, non-intrusive. I can just have a video camera observing my operations in the plant without disturbing anyone or without intruding in anything. And that's the beauty of the video analytics, and that's why it's so popular. But interestingly, there is another medium which is also equally beautiful, but not that popular for data analytics, is sound. The machines, the factories, the manufacturing factories, they make sound. If you think of the factory, the first thing that comes to your mind is sound. There are a lot of noises. And not just, again, the factories. Think of vehicles, think of airports, the industrial world. Think of trains. When you're moving in the airport, there are sounds everywhere. When your plane takes off, there are sounds. And the sounds tell us a story. If something is wrong, the sound is different. If you're, I mean, imagine if you're going in a train and suddenly some loud noise comes, you will be alarmed. That's your neural network telling you something is wrong. So our attempt was, and now that's an emerging field, can we train an artificial intelligence model to understand the sounds? For example, a car mechanic, the first thing when we take a car to the mechanic listens to the sounds, and their first diagnosis is by sound something is right or wrong. So the idea is, can we mimic that? And exactly that's what our company has been doing for the last 4 or 5 years. Now this area has a lot of challenges. Number one, the question is it even possible? In video or image analytics, yes, we know it is possible. There are many state-of-the-art image analytics models. There are image databases. People have developed architectures. There are competitions like ImageNet where really the worldwide community comes and solves the problem, and we know they are solvable. But in sound, it's not even, we are not even at a stage today, the whole research community, where we know the problem can be solved. If you make me hear an arbitrary sound and say, Anand, can you develop an AI model that will understand the anomalies in this sound? I'm not even sure it's always possible. So, but in some cases it is possible. We have shown that sometimes it is possible, and once it's possible, it's a beautiful thing. And the power of sound is amazing. Imagine this, right? A sound can be coming from my car engine, and I can hear it from outside. So it comes through the metal. I cannot see the engine. So the image needs a line of sight. Sound doesn't. I don't need to, the sound is coming from inside the engine, and my engine cover is not transparent, but I can still hear it. It could be coming from cylinder number 2, but I can still hear it. My car could be behind me, but I can still hear it. My car could be driving around, I can hear it. So it's a 360-degree medium, and it's non-intrusive, and it's really just comes out of any metals or anything. So that's a beautiful property of sound. So machines have been talking to us. If we could develop language to understand what the machines do, we have an amazing source of data. So we don't need to instrument the machine with lots of sensors. I mean, maybe we still do, because that gives a different kind of data, but sound by itself is an amazing information. And that's really the idea of this. Now, again, this is a challenging field. We have been working hard. We have some success stories. We have some failure stories. So it is not a sure shot solution, but it's a very exciting work. And I don't have a lot of time today now, but I'll be happy to share some of the examples later. So let me show you one quick example about industrial sounds. And what you can do with industrial sounds is you could really identify the anomalies, and that's really the primary application. Your machine is regularly make some sound, and today it is making different sound, so that's anomaly you can do. You can classify sound. So you can say, hey, this is the sound of a drilling machine I can hear. Or this is the sound of the air thing I can hear. And here is another example. You could even use the sound to measure specific parameters, not just classify anomalies or that. And one example of that, this is a completely toy demo we have built. I'm not saying this has any direct application, but it's a demo to illustrate the power of sound. So what we did, on the left-hand side, I actually measured the RPM of my own car, and the left-hand side meter is the real RPM of the car engine. And I also recorded the sound, and we train an AI model that will listen to the sound and predict the RPM. So on the right-hand side, you will see predicted values, and they are predicted by the sound, purely by the sound. I'm not even touching the car. Actually, it would have done on a mobile phone. So we just stood outside by listening to the sounds on a mobile phone, and I have my application running, and it will tell what's the RPM the car is running. So this is a real demo with the real data, and on the left, you will see the actual values. And let me play it. Sorry. What I wanted to do was, sorry, I went back. So I stopped at an arbitrary point, just randomly, just to show you the accuracy. So the real RPM is 2417, and predicted is 2436. So for all practical purposes, this is very good. So let me stop the demo, but the point you get it. So, and imagine the power now. It's a non-intrusive, so I don't even need permission. I could just stand outside a random car and measure the RPM. Again, we are not recommending that you do, but you see the power, right? So now if I apply that to the sounds of the factory, I could have a handheld device. I could walk in my factory, and I could just stand next to each machine and just know what the machine is doing. And that's really the vision we have. And now, taking this forward, that's how the device we developed. So this is a device, which is a handheld device. Again, it doesn't work in all the cases, so don't assume but it's a work in progress. So in many cases, it works. So the idea is you take this device, it has a microphone, like a handheld thing, and you move around, and you have various AI models for different kinds of sounds in the factory. And this device can tell you so much information about factory that, hey, something is wrong and something is right. And that's the power of the sound. I'll skip some of the slides, but let me quickly tell you where we have used this. So we have got good traction for this in Japan and in manufacturing industry in Japan. So we have used it for metal cutting industry. We have used this a lot for welding industry. In welding operations, knowing the quality of welding in real time is one of the hardest problems and one of the most painful things. In welding, when you do the welding operation, there is just no information to know whether the welder is doing it right or wrong. It is only after the welding is done, even after that, you have to practically do destructive testing. You have to cut open the welded joint, and then inspect if the quality was good or bad. And even if that quality was good, you just assume that the rest of the parts being welded are equally good, because you cannot open every welded part to check. So that remains a fundamental problem. But the sound is a very amazing thing. So when the welder is doing welding, the sound of the welding process is different if everything is all right. If you do beautiful welding, it's a nice, continuous, smooth sound of that welding process. If the welder has set the current too high or the voltage too high, it makes that crackling, sizzling sound. So that cut sound you hear in the welding, that's a sure shot sign that something is wrong. So that's the beauty of sound, and we have done a lot of work in detecting quality of welding in sound analytics. One example, I was earlier mentioning about detecting the types of sound, right? So we did one work for in an American company's automobile factory in Chennai. The factory was in Chennai. And then they were doing a lot of very fancy ultrasonic welding in their machine, and we had installed our sound analytics devices for detecting some of their weld quality. And interestingly, we found a signature of sound which was very unique and which was unexpected. That was the sound of air leaking. So when you have this hiss sound, when the air leaks, like when your tire, you release the air out of tire, you hear that sound, that fuss sound, right? And that you cannot humanly hear it, but the AI models, we had a model tuned to detect the frequencies of the patterns of the air leakage, and that model detected that, hey, there is a leakage of air. And that factory manager said, no, it's impossible. I mean, our machine is fine. But we said, no. Then we showed him the signatures from this time to that time. And then when they went there, they actually realized they had the pneumatic machines, the pneumatic fixtures which hold the part during welding. There was a leakage from the pneumatic fixtures, and that was affecting their alignment and a lot of things. But that was completely missed to them, because there is no sensor that would tell you that, oh, there is a leakage. But that could be detected from sound analytics. So again, I don't have too much time, yeah, so we even in one factory in Japan, we developed an entire data visualization dashboard. They had many machines, and now they can track each machine's availability, uptime, downtime, the number of productions done, all by the sound of the machine. And so there are many interesting cases like that. Another example of the sound analytics in a different way. So all the examples I talked earlier where machines were emitting sound, or the defects emit the sound, something like that. But there are other applications where you do, the device is passive, and you do sound analytics in a different, interesting way. For example, this is one, again, work we did for a company in Japan. They have these electric poles, or the telephone poles, and they wanted to know the health of the pole. So you have a sort of a repairman or the maintenance person who goes from pole to pole, and now that person has to determine, is this pole okay, or does it need maintenance at that point? How would he determine it, right? So they had some other technology and sensors, and it was not working well. It was too cumbersome. So what idea of that, let's build a sound analytics device, and in that case, the pole is silent, it doesn't emit sound. So what we did, we added a transmitter. So in this case, there is a unique application where we have to generate our own sound. It's an ultrasonic transmitter. It sort of imparts wave sound at 40 kilohertz. So you cannot hear it. It's beyond the hearing. But at 40 kilohertz, it puts the sound on the that metal structure, and it looks at the reflections. And then the AI model were trained to detect the defects from the reflection. So how the healthy poles would reflect the 40 kilohertz waves back, and how the defective poles would reflect are different. And we were able to train AI models which would detect the differences. And that actually, again, the accuracy was quite good. So that's another example of sound analytics. The other example, again, this was in Japan, is to detecting the CNC machine. So this is kind of a machining operation. And then they used to say, oh, I did 100 parts, and after the lot of 100 parts, maybe 3 out of the 100 are bad, defective. Something went wrong. Of course, you know it's already too late. I have 100 parts and 3 went wrong. I have no option but to scrap the 3. Instead, if I could know in real time when the operation is happening that, hey, something is wrong right away, they could stop the operation, or they could correct it without wasting that part or without scrapping that part. And then that's where we use sound. Even in a CNC machine, although everything is well controlled, things do go wrong. It is not 100% repeatable, perfect machine. And the sound of that cutting process is, again, very interesting. When everything is going smoothly, we hear sound of type A, and when there are defects or something is wrong, we hear sound of type B. And we trained the AI models and got that to work. So I think, I'll stop in a couple of minutes. I have a very short time. The other interesting question is, what about vibrations, right? So sound and vibration are very related. Like in mathematics, I call them, they are cousins of each other, right? So sounds are the pressure waves and the vibrations are the mechanical waves. They are related. So there are a lot of companies doing vibration analysis, and it's a more established area. So what is unique with sound? So why not vibrations, and why do we need sounds? So yes, in physics-wise, they are related, sound and vibrations. In fact, vibrations themselves emit their own sound frequencies too, because the mechanical vibrations would lead to acoustic pressure waves. So they are connected. But the difference is that there are some applications where vibrations are great, by the way. I mean, measuring vibration gives you a lot of information. So I'm not saying anything wrong with that. That's great. But there are many places where to measure the vibrations, you have to install a sensor which is touching the machine, and that's often not possible, or that may just be impractical. And second, where you measure vibration is very critical. If I have a big object, a mechanical system with 10 components, and if my source of vibration is component number 1, and if I'm measuring at component number 3, it is already going through a lot of transformations and I may not get the right thing. Sound, on the other hand, just permeates through everything. And I could hear the sound, like car engine. I could hear the sound of the car engine from outside the car, but I cannot get the vibration pattern of my car engine from outside the part. If I touch my car bonnet, yeah, I feel vibration, but the pattern is much different than the pattern of actual engine inside, because the damping in the hood and in the insulators, the engine mounts, everything has changed the sound pattern, the vibration pattern. But that thing doesn't change the sound pattern. So there are pros and cons of using sound. On the other hand, vibration, the beauty of vibration is that it's a very beautiful mathematical problem and there are nice algorithms. So solving a vibration problem is much easier mathematically. Sound is very complicated. And it's a sort of, honestly, mathematically, sound analytics is much, much harder and more complex than vibration analysis. So there are pros and cons of these two. So that is it. I think I'll stop here. I'll be happy to answer any questions or even meet outside. Yes. Sure.
That gives you a huge advantage over anything else. And second, I think I was early in Tata Motors, and we have been using some of the acoustic methods of defect finding, the forging or forging cracks or say casting cracks. I mean, this can really help there, because to detect acoustic crack, you need an entire setup altogether. As you said, you can induce some kind of vibration and see the result of that vibration. Naturally, the defective part, which has got an inclusive crack or a bubble inside, will vibrate differently. Natural frequency will be different. So I thought, is that possible or not? That's what I was trying to ask you.
Yeah, thanks. So it is possible. In fact, yeah, so although I said sound analytics is new, maybe that was not 100% honest. The acoustic sensing is already there before, but the difference is this. The acoustic sensing is very specific to the type of machine or type of thing you do. For example, the acoustic sensing that is used in the oil wells. The oil wells, they use the traditional acoustic sensing. The oil pumps, which are like many 100 feet down the ground, when they fail, right, there is a sound. But that acoustic sensing is developed on the physics of that sound, and there are domain experts who know exactly how that pump is making sound. That acoustic sensing is completely useless if I want to apply to another machine. So that is the traditional sensing. Once the power of deep learning is that once you tackle that problem in a deep learning framework, you can practically apply that to any sounds in the factory. And that was the, okay, sorry. Yeah, so the deep learning based framework makes the method generalizable, where the idea is you could apply it to any sound in the factory. And that is where the deep learning based sound analytics is new. But you are right, acoustic sensing is a traditional field. Yes.
One question on the shop floor, there are, like, it's very noisy shop floor, always. How you are going to apply those filters? Because not necessarily every sound that you hear is probably going to give a result or what you are expecting from the problem. Just to give a problem statement, on the assembly lines, there are a lot of electric connections, and there is a tick sound that comes from the connectors, right? So how, and again, around the same process, there are multiple sounds are also available. So how are you going to have that filtering mechanism wherein you are going to choose that specific sound that is of interest?
Yeah, so actually you asked the right question, and that is one of the reasons I said it doesn't always work. So in fact, that is what you mentioned is our number one nightmare. So I said I can share few success stories and few failure stories. Failure stories are all related to that. So when you have a lot of intermixing of noise, this doesn't work well. I mean, in principle, even there are techniques where you can sort of train with a different distance from the microphone and make the model learn the distant sound, nearby sound. And we tried all of that, but in practice it doesn't work well. So yes, it's still not there. We will not, but even today there are some applications where it works. For example, we did one work for a electric motor manufacturing company in Romania. So what they do is that after every motor is manufactured, they anyway want to test, and they build, as a part of their original testing, there is a small soundproof box where they go and put a motor, and a human inspector listen to the sound. That point, there is soundproof box. So their AI model will be much more accurate and fast. So there are some applications where it works, but some application doesn't work. Even that electric trick, even on the open, it is possible, provided there is no other sound in the vicinity which is very similar to that. But if you put another machine making exactly similar sounds, yes, the model will get confused. Yeah. Yeah.
Hello.
Yeah.
Hello, sir.
Yeah. Hi.
So classification of sound is easy. Means
Okay.
Sound of car and other means machine. But the sound, normal sound and abnormal sound, that is very difficult. Because training data set require more for the training purpose, ANN or any decision machines.
Right.
And all. So how to get the data, training data set with different classification as well as normal, abnormal sound. So that is the challengeable thing. Actually, I think training data set is a very important for the training purpose.
You are right. You are absolutely right. So, number one, when I said classification, I did not mean classifying car sound versus machine sound. I meant within the machine itself, we can classify the sound as healthy or unhealthy, normal or abnormal. So there are two ways to do that. One is the classification model, and there the data is a challenge. As you said, it needs the data of both classes, like a class when the machine is working well, and then the class when it is not working well. So in some cases, we were able to collect the data. For example, if you want to simulate that the machine is leaking air, it's quite easier to just open a valve and make that sound. So some cases it is easy, but some cases it is not. And again, that is why I said this is not a yet universal solution. But having said that, after trying this kind of classification method, recently we switched to, with advances in deep learning, now we use a method called anomaly detection or one-class classifier. So those are becoming quite powerful now. 4 years back when we started this, right, those were not very stable method. But today, we have a lot of our in-house algorithm. We just need a data of the normal class, like the outlier detection. So it says, give me the data only when machine was working fine, and that is easy to get because most of the time your machine is working fine. We train the model only on the one class, and now anytime the sound is sufficiently different from that class, it will call it as an outlier. So it's a one-class learning. And that is really solving a lot of problems because that doesn't need the data, but the negative of that is that it is likely to give a lot of false alarms. Because anytime something is sufficiently different, it will call an alarm, and it just could be that somebody else is making sound nearby or passing by. So there is a pros and cons. So you have to eventually balance out the false positives versus false negatives. And so to some extent, a lot of that is this is why I said if it's an emerging area, there are no known solutions. So like we have built our lot of trade secrets. There are today only 3 or 4 companies in the world trying to do this deep learning on industrial sounds, and all of them are doing their own experiments and sort of building their own secret sauce to how to solve the problem. But there is no universal answer yet. Yeah, so yeah, that's right. Yeah, any other? Yeah. Okay, sorry about that. Yeah, I can take my. Yeah, thanks everyone.
Thank you so much, Anand, for sharing your valuable insights. Just a minute. A small token of gratitude from Nasscom, please.
Yeah, thank you. Thank you. Oh, thank you.
Thank you. Up next, we have another session on deploying a digital supply chain network for accelerated value. This session delves into supply chain control tower in digital network and fundamental principles of AI-driven digital supply chain network. The session will be delivered virtually by Kent Ledgerwood, who's the SVP Value Engineering One Network, followed by question answers with Mr. Nandan Narvekar, who's here with us, country head GTM strategies from One Network. So I think we'll start with the video.
time with you today. My name is Kent Ledgerwood. I'm the Senior Vice President of Value Engineering for One Network. Today I'm going to share with you what I've learned over the past 25 years in supply chain management. Ultimately, by the end of today, what you're going to find out is that the value from a digital network is so much more than any other approach. So I look forward to the discussion, look forward to your questions at the end. And with that, let's get started. So again, let's talk about digital supply chain networks and ultimately the value that can get unlocked when you have a true digital supply chain. We all understand supply chain is about the right product in the right place at the right time, price, and quality. But the reality is, in 2022, customers expect more. Now they expect speed. They expect resiliency with agility, that they're never out of stock and never worried about where the product is. At the same time, they're also conscious and conscientious of the most sustainable options to get their products to market. So what we hold ourselves accountable to, as well as our competitors in the market, is that every client in every digital supply chain should expect nothing less than the optimal service levels at the lowest cost, with the most focus on social and environmental sustainability, all to deliver on time, in full, at the speed at which the customer requires it. Now let's take a look at the industries of retail, automotive, and logistics, and the reality that they've all faced, where agility and resiliency all got exposed. What I'll contend, after having spent 25 years in supply chain, is that COVID was only a symptom. It wasn't the root cause of the operational issues. Now, when we look at the impacts of any one of these, in retail, 60% of customers experienced out of stocks over the past 2 years. Foot traffic to retail stores was down by 16%, while e-commerce boomed at $800 billion in sales in the US alone. The market shifted in terms of how consumers came and expected markets to be in product on their virtual shelf or at their front door. What retailers started doing was driving inventory into that system. So on average, they're carrying about 65 days of supply and still only able to meet a service level of 72%. When it came to automotive, we saw the impacts of semiconductors, the demand variation, and the product complexity. In those industries, 81% of those top auto manufacturers are concerned about visibility, but only 28% have full end-to-end coverage of their network. And in logistics, it's the cost, it's the service, it's the regulations and sustainability that are really driving the market. What we saw is the driver shortage, the impact to ports and port blockages, et cetera. And ultimately, it was the constraints on the market that limited it, not just COVID itself. When you boil it all down to the real cause, it's because we operate supply chain in a very complex world. We operate globally with multiple parties across multiple tiers of the supply chain and in different time zones with different data structures. And ultimately, what that results in is variation. It's that variation which is causing the fluctuation in supply, demand, and availability across the market. Demand variability being unpredictable demands, new products introductions, consumer behavior driving changes, whether it's supply availability in terms of raw materials being available on time and full, or constraint management and capacity management at factories, and then logistics variability, which is really gets down to the coordination of the internal and external communications to keep trucks, planes, boats, and the entire network of product flowing in a seamless process to bring products to market. All of that variation comes down to two simple fallacies in every other supply chain solution out there. They are built on fragmented system and data architectures, where every partner and supplier and carrier are connected on a point-to-point. What that does is that creates massive amounts of data and data architecture structures that have to be patched and passed in with message bus technology. When you couple that with every entity of the supply chain has their own data, their own master data, their own structure, that means that they may only update it on an infrequent or periodic basis to the rest of the network, leaving gaps in availability and visibility to what's going on. Now, what all that leads to in a system architecture point of view is that 99% of all other systems are built off a batch processing methodology. Now, let's use that in a retail example. Let's assume that I'm a retailer with an out of stock today. When I'm running in a non-network supply chain on my current core applications of visibility and execution modules, what I've done is I've captured that out of stock this morning. I batch my purchase orders, my inventory, and create the replenishment for that order overnight because the system is batched. I pass that order to my supplier, who then runs their batch to commit that order. Once that order is committed, then they pass that order for pickup to a carrier that then patches it through their system. So ultimately, we would have gone from today for 3 days in nothing but system lead time to solve that out-of-stock problem. As a customer who expects speed, on time, in full, if I'm out of stock today, waiting 3 days is not an option. Now, the right way to solve this is to have concurrent, incremental, and common data in both system and data architecture. Where there's one single version of truth, master data is propagated and shared in real time across all tiers of the supply chain to protect against any risks that are seen or unseen. Once all of that is in place and you have a true one-time onboarding single version of truth, then what you can have is planning actually tied to execution, where all demand plans, orders, and transactions are moving throughout that network to every party in that network, taking 100% of that data latency and process cycle time out of operations. But look, don't take my word for it. This is Gartner's view of the world for what it means to have a supply chain control tower in a digital network. And if you notice, going from level 1 through 4, they agree. It starts with data consolidation. All parties must have a single version of data throughout that network to give them real-time visibility at level 2. And when they realize that they have visibility and they can act on those things that they couldn't see before, they need the ability to act. They need the ability to autonomously prescribe and have the system self-learn and prescribe issues and resolutions to resolving any disruption that's occurring. Once those issues are starting to resolve, then ultimately what can happen is companies can interoperate in one seamless process and autonomy can come in. So automating purchase orders, automating shipment confirms, automating bookings and door schedulings, et cetera, all are possible when everyone is operating on a seamless instance of data. Now, when I approach the market and I solve this for clients, ultimately this is what we do. We start with the bottom layer where we have a single version of truth across all trading partners, so that every actor gets visibility to an impact to the ultimate customer need date, and we go beyond that visibility with prescriptive actions to pass to the user and the suppliers and the carriers for collaboration and execution all in one instance. Because it's multi-party and multi-tier, then ultimately AI can drive every partner in the network to both visibility and actionability in real time. And what that leads to is zero latency in data and process, earlier visibility, and full demand translation to every partner in the network so that we can start solving demand variability, supply variability, and logistics variability. Now let's walk through actually how this works with a real example. Now, just before we get started, I want to talk to you about the principles that have to be inherent in a digital supply chain network for AI to be effective. First and foremost, there has to be an embedded control tower with dynamic and adaptive workflows. The reason for that is we know that every day is different in supply chain. Every business process is different, and we can't predict and anticipate everything that's going to occur every time. So workflows have to be adaptive, and they have to model to what's going on in the environment around us. Second of all, there has to be a multi-tier, multi-party network where every supplier, carrier, and partner in that hub is connected back to each and one another, so that as changes occur, any impacts up, down, or cross-stream are taken into account. Third, planning and execution have to be tied together in real time. As I said before, a great plan is not as good as a great revenue and a great customer satisfaction. From that planning and execution, the AI and the algorithms must be learning back and forth. As plans change, so do orders. As supply constraints happen, plans change. So planning and execution have to be tied together through the process. And then ultimately, all the propagation of issues have to be translated and communicated to all parties. So remember above, I said that you have to have a multi-party and a multi-tier network for this to be able to work. Well, once that happens and that network is connected, being able to collaborate across that network, whether it's a tier 1, tier 2, tier 3 trading partner, et cetera, have to be enabled to collaborate and effectively solve the problems. And then finally, because supply chain is operated by people, it is a people business. And therefore, every action and reaction has to happen in a way where exceptions are offered to the users through smart prescriptions so that their amount of workload is maintained to a level where execution can actually transpire and move faster. Now, the real example is, let's get started with just orienting you to the chart. If you look at the top of the chart, there's a nice little timeline that talks about mean time to resolution, from the time the item or issue is discovered to the time it's resolved. I'm going to start with traditional systems and how they can't solve this problem. So a traditional system is built off of visibility or a batch system process. In other words, I can see the problems that occur, but I may have to go to another system to solve it. Or I may see the problem and be able to solve it, but it's going to take an overnight batch to actually update that network. What that leads to is ultimately they're running in sequential and disconnected steps. So a late shipment inbound means that I have to update the schedule in another TMS or OMS system to reschedule the door, rebook the appointment, recheck the truck in the gate. Then once I've done that, ultimately what I'm ultimately doing is I'm treating each disruption as a static event. A late truck actually has an impact inbound on an order outbound. And if those processes are disconnected because the data is disconnected through multiple systems and batch processing, the actual result of knowing a truck is going to be late won't solve the problem of getting the product to the customer on time. Because of that, what it forces the nature of the user to do is it waits for the user to resolve an issue. Once they resolve that issue, the batch runs, and then the plan and the execution updates in the batch process tomorrow. Disconnecting that plan and execution is what slows most supply chains down and creates most of the variability in the network. So now, to make it real, let's take a real-world example where we're going to talk about an out-of-stock. And what I'm going to show you is how a digital supply chain network solves the entire network in a matter of clicks, not in days. In this case, we'll start with a projected out-of-stock, an order inside of lead time where I'm going to run out of stock. The first thing that the AI is doing is looking at the demand and the supply availability, the inbound shipments, etc., and prescribing back to the user what and when is your problem going to occur. So in this case, my problem is going to occur for 3 days. I will have this amount of lost sales, both on the month to date, the year to date, etc. So I will give the user more power to know the actual impact of their job of solving that out of stock just by knowing what is the business impact to it. Now, in any other system of the world, what will happen is if I got visibility to that situation of an out of stock, I might have to log into another system, call a carrier, call a supplier to start orchestrating that manually. But with a digitally enabled network, what happens is the AI is looking at the out of stock, confirming whether there's a carrier or assigned to be able to pick up the new supply I need, and to know whether there's actual door capacity at my receiving facility to receive that product in against the constraints of the warehouse in order to meet the consumer demand on the end. As that's occurring, we know that the exceptions always occur. There's road patterns, there's traffic delays, etc. So the full track and trace, as anything is occurring in the network, if it needs to be recomputed, the AI is running incrementally and concurrently to start solving that. So from this situation, in a matter of just seconds, the AI has predicted the out of stock, found the carrier assigned or needs to be assigned, booked the door, scheduled the door, and solved any exception throughout the network. The way we're able to do this, and the reason we can solve this with a digital supply chain network, is I'm leveraging all the partners' constraints, the contractual terms, and the supply in the network to optimize the best solution. I'm using AI and predictive insights that present back to the user the optimal solution. Instead of presenting a business insight, I'm presenting a business intelligence that tells how to solve this problem with one click of a button. And I use dynamic, concurrent, and incremental data in the system. I do not need to run a batch planning system because I'm running concurrently with an out of stock, the availability of trucks, the position of the network, and the flow of goods through the doors and the capacity of the warehouse, all incrementally as things change to keep the system updated. What this allows for, this incremental running, is it allows me to optimize the full network at any point in time. I don't have to wait for an overnight batch run. I can solve it today. I don't have to wait until tomorrow. And that resolution allows me to solve issues in clicks, in hours or minutes, not in days. These are real results. These are proven results in our network of what our clients have experienced. So at the same time, I can reduce demand variability, supply variability, and logistics variability. These are all mitigated because of my single version of data. I provide absolute end-to-end real-time visibility with AI prescription and actions so that autonomous supply chains can run with real-time engines where planning is connected to execution. What that means is that I can reduce inventory at a DC by 78%, a retail store shelf by 50%, all while improving service levels up to 99.7%. I have taken out every buffer, every just-in-case inventory through the network and solved to the actual customer end need date by projecting that demand, supply, and logistics backwards through the supply chain and forwards in the motion of goods. Ultimately, what that leads to is lagging indicators like forecast accuracy. So when I optimize my forecast accuracy to try to come up with a better algorithm to predict the forecast, what I'm doing now is actually solving the forecast by meeting supply and demand on the terms of what matters to the customer and the consumer in the market. My DC forecast accuracy will jump all the way from 80 to 99.5%. That's unheard of in previous supply chains where I had to put in excess amounts of buffer that were unaffordable to be able to solve that. And then on the supplier side, the difference in a network approach versus a point solution approach is that there's value in it for the supplier. As the supplier's forecast increase through real-time information, real-time visibility of actual orders, actual demands to what's needed and the capacities in the network, their forecast accuracy goes up. As the forecast and the certainty of a supplier gets more accurate, the cost of goods sold comes down. I no longer have to build in limited liabilities, projected overruns, planned overtimes, et cetera. I'm solving to the actual pain point and the need of the consumer in the market. So I hope that helped everybody today. We're glad to take any questions, and what we want to just leave you with one point, that actually a digital supply chain network creates 10 times more value than visibility or point solutions in the market. Again, I'm Kent Ledgerwood. Thank you again for your time today. Hopefully this sheds some light on what a digital supply chain network is capable of and is now actually in practice to execute on.
Any questions?
I think it's a no-brainer, but I still ask this question. Nandan, this is Keshav Senia. I think hope you remember me. Yeah, I think some of the, like what we are seeing now in supply chain disruptions and illumination is that a lot of macro and micro things happening simultaneously, whether it's a Ukraine war or whether it's a China thing happening. So I hope that's also getting factored in forecasting and even the customer demand also. While the material supply, raw material supply may get hampered because of this, or even the demand get hampered. So probably in this, are you factoring in this micro and macro economic fluctuations?
Yeah, so what we do is like, we don't try to forecast and do long-term kind of thing. So what we try to do is, we try to get a single version of truth across the supply chain. Try to get that information much faster for you, so you know whatever is happening real time in the supply chain network. Now, if you want to make changes or respond to demand or a supply change, then what we either you can look at the dashboards, you can have alerts, you can have milestones, but we have something called as, we can identify patterns, data patterns, why, what is happening and all that. And we do have intelligent agents. These are all AI machine learning based agents. So suppose if you have too many micro things that are happening restricted to that particular subnet, then these learning agents can keep on looking at the data and they can actually learn out of it. And you can even have execution agents. So now what is meant by execution agent is change this shipment, or maybe split this shipment across to multiple, or maybe consolidate across, change the route so that you can actually consolidate 2-3 trucks because you have a demand for certain DCs which are going up, some going down. So those kind of things you can do both at a macro level. So if there are changes where you have changed the plan itself because something happened, you have a war, you know things are not going to happen, you want to change the plan, we can get that plan very quickly across to the multiple nodes in the supply chain and respond faster. Normally what happens is why most companies are not able to respond is because they are into a batch mode. Okay, so you run batches and do that. Here you can actually do much faster and using the AI technology and also the execution capabilities. So we can actually bring planning to execution or execution to planning. You want to change your demand sensing or demand forecasting. So Kent mentioned about very high increase in forecast accuracy. Okay, in today's world, most people are on Excel. So typically your forecast accuracy would be 50%, 60%, 70%. So if you're working in certain industry like food industry or retail where your demand changes a lot, then you can pick up the demand sensing from various locations like your point of sale. Get it across quickly and use the agents to actually churn the execution much faster. This actually reduces the inventory to a very large extent. And most importantly, it gets across your, whatever is your lost sale, you know what is your lost sale, and you can respond to that by reducing your lost sale. That's where people gain out of this in a big way. Thank you.
We would like to extend our thanks to Kent for taking time out and doing this virtually, and to you, Nandan, for being here and taking the questions. This is a small token of gratitude from Nasscom. Thank you. Thank you. Yeah. So please bear with us for a little while we set up the stage for the next session. Yeah. V2X, Vehicle to Everything, which will be moderated by Mr. Samir Yajnik. He is the Executive Director of Electrodrive Powertrain. The rest of the speakers are Mr. Chandrasekhar Joshi. He is the Chief Architect Technology Solutions from Tata Technologies. Mr. Vijay George, he is the Divisional Leader, Digital Solutions, Intelligent Solutions Group from John Deere. Dr. Yashodhan Gokhale, he is the VP from Kalyani Powertrain Limited. So, over to you, Samir.
Thank you so much. Good afternoon, everyone. How's everyone doing? This seems to be a fairly concise and compact room, so we can have a nice dialogue over the course of the next 50 minutes. You know, connected cars or connected vehicles, as we called it about 3-4 years back, was still very much, you know, what if cars can be connected to various devices through 4G and you know, through various IoT devices, etc. Very much about the possibilities. With the coming of age of technology, as well as with the coming of age now of 5G, this is very much connected vehicles and connected everything, which I'm going to just refer to now, is very much ubiquitous. It's everywhere. It's pervasive. It's happening, and it's now, right? First, just to level set, because I know there are people from the automotive industry and there are people from the non-automotive industry in this forum, in this innovation conclave. So just to kind of set context, when one refers to V2X, we are talking about vehicle to vehicle, obviously, you know, connectivity, vehicle to infrastructure, typically the highway infrastructure, vehicle to other networks, vehicle to pedestrians, vehicle to devices such as smartphones, and essentially any and everything. And the kind of use cases that are coming out are phenomenal. So here to speak with me and to have a chat on this subject, Dr. Yashodhan, Vijay as I will call him, and CVJ, my ex-colleague from Tata Tech. We're all here gathered. So without much ado, I'm going to first open this up with Dr. Yashodhan to ask his perspectives on what is his take on this V2X and how mature is it? Is it coming of age? And just one more thing before you go, Yashodhan, is by the way, this industry of connected vehicles is expected to be worth $220 billion by 2025, growing at the rate of 15% CAGR from now, or already from 2016. So it is already leading the digital revolution, because so much of data is being produced that India has a great opportunity to maximize you know, what we can do from here for India and for the world. Yashodhan.
Thanks, Samir, and thank Nasscom for arranging this event. First of all, it's today's era we call with the AI, machine learning, electric mobility. I'm going to talk about more on the electric mobility with my domain, more on the batteries and BMS, where we can connect these dots. If we wanted to go, still there is a range anxiety, which really I want to buy electric vehicle or not, though there are fires coming up where people do lots of jugaad, especially in the two-wheeler domain. But more importantly, the connectivity from the digitalization point of view. It's all about how you connect the dots from mechanical, electrical, chemical point of view, and to make the sustainable product for our needs, not for the Western needs or not for our neighboring country needs. Because the country like India, at the same time, we have the temperature from 0 degree to 45 degrees C, where the Guwahati, where there is a humidity, then Chennai, Rajasthan, and especially in the automotive domain, when you develop any battery pack, which is the main heart and brain of your any electric vehicle, is defined by how your components are arranged in a systematic way and more sustainable way. So I will go more further.
So straight away he's gone into the connectivity due to electrification, which we'll talk about in more detail. VG, your view.
Sure. Again, thanks Samir and thanks Nasscom for the opportunity. Glad to be here. I represent John Deere. It's the world's largest equipment manufacturer in the agriculture space. I would assume in the audience, folks do not necessarily are as well versed on the agriculture side of things. So I'll just set some context before we get into the details of what John Deere does, and especially on the technology front. Now let's look at a mature market like the US market. Okay, let's look at a farmer in the US. A typical farmer in the US would have a farm size of a few thousand acres. Okay, and this farm is not necessarily a single farm. It's not all connected. There could be different pieces of farms, may or may not be connected, joint, but altogether about a few thousand. Each single piece of farm could be anywhere between 200 and 700 acres. For comparison, in India, average farm size is about half an acre to 2 acres. So we're talking about farm sizes of 200 to 700 acres. And this entire farm is managed by a farmer along with about 2 or 3 full-time members, which could be just his family members, and a few helping hands, which are hired during peak season. So that's how he manages his operation. So the challenge is, how do you enable all of this to ensure that he's successful? And that's where John Deere comes in. And again, as I mentioned, John Deere is the largest agriculture equipment manufacturer, has been in the business for about 180 years. However, in the last couple of decades, Deere has been focused on transforming itself from being a pure play equipment manufacturer to move over to being a data-driven technology company. And we'll have some examples where I can share of how that's happened. Let's start with a couple of examples. Earlier this year in the CES show in Vegas, the Consumer Electronics Show, right? It's the largest electronics show in the world. Deere unveiled its first fully autonomous tractor. And now this is a fully production-ready tractor. This is not a POC or proof of concept or technology demonstration. This is a full ready, production-ready equipment which was launched. This has about 6 stereo cameras which capture images. These are passed through deep neural networks where each image is then converted, each pixel in that image is converted and analyzed within 100 milliseconds to determine whether the machine should move forward or not. Another one is something called a See and Spray Select, which was released. This was a precision herbicide application machine, okay? Now See and Spray, what does it do? When a machine is moving on the field, when you're doing a spraying application, now these tractors are huge machines. For example, in a room like this, you could barely fit one tractor. Okay, these are huge machines. And it'll have a spraying boom behind it, which could be almost 120 feet wide. And it'll have multiple nozzles, which are individually controlled. Now what See and Spray did was put cameras on it, about 36 cameras, which are about a meter spread apart. And they continuously capture images while it's running on the field, analyzes what it sees on the ground, and determines whether what they are seeing on the ground is a weed or a plant. And if it determines it's a weed, it will spray herbicide on it so it's taken care of without impacting anything on the plant. So that's the level of technology that's already out there. This is just the beginning of the journey. There's many more exciting things that's coming up in this space. And again, we'll get into a few more details as we get into this discussion, but I'll leave it at that for now.
It's going to be very exciting, the discussion from the connected ecosystem and electrification to the connected ecosystem and agri. Let's ask CVJ, what's his perspective, having worked with multiple companies in the automotive space?
So thanks, Samir, and thanks, Nasscom, for being part of this session. And glad to be here. As Tata Technologies, we help our customers drive, fly, build. So we provide solutions in engineering systems, including digital space. And now today's topic is V2X. So I would first dwell on few aspects or dimensions of this ecosystem which makes V2X happen, I would say. So first is technology. Samir dwelled upon that. There's a huge disruption happening. If you look at even last 10 years, the way the change of disruption in technology has happened, different emerging technologies that we see, IoT, AML, conversational bots, and a lot of things, augmented reality. So this is now becoming mainstream. It's no more something like running in some pilot use case and stuff, or some one company doing it. Everybody is using that. And
this is the creating a base for what we are going to see, what is to come. The second aspect is data. So data is growing multifold. It's as per one report, we are going to see like 50x kind of data, 50 to 100x kind of data, and with 5G, I don't know what would be the explosion. So as you get more and more data, the possibilities also increase of using data for a lot of insights and decision making and enabling, helping the drivers, occupants, and the community. Third aspect is the cashless economy. So we have seen Digital India coming and all the online services coming in. So connectivity is everywhere now. So everybody of us is connected, smartphone penetration. Everybody has a smartphone now. So it's no more new thing to have. So that way it also gives another element to the ecosystem to get the individual connected back to the vehicle and the overall ecosystem as such. We see focus on road safety and safety as overall. So safety also brings in a lot of aspects of getting guidance, getting help from the environment so that one can drive the vehicle safe, one can make the surroundings safe. And these are the different elements I feel which are going to make this V2X, as you rightly said, whether it's vehicle to vehicle, vehicle to infrastructure, everything possible. And I would rather say it is more about the software-defined vehicle, I would call it. Excellent. So when I say software-defined vehicle, it's the connected ecosystem that is helping the vehicle to navigate within that environment. And that is going to be the thing, and that is the thing now. And V2X, C is cellular, but there are other technologies to that. But V2X as such is around that software-defined vehicle. That's what I feel. Thank you.
Excellent. Just a factoid for everybody. A typical autonomous vehicle consumes and processes about 4,000 gigabytes of data per day. That's like the minimum it does. There's far more. And imagine if there were hundreds and thousands of vehicles, how much of data needs to be processed. We'll come back to data, but CVJ, you touched upon it. I wanted to talk about the human element for a minute. What are exactly the drivers for this vehicle to X or connected cars or connected vehicles? What need are we addressing? Or are we just getting swept by technology? You touched upon it, but I'm allowing you to start. You start first, yeah.
So thanks, Samir. That's a nice question. When we talk about key drivers, safety definitely is one element to it. But there are multiple other factors. Like if you talk about a typical vehicle and primarily the cities, we are spending 1 to 2 hours, anywhere between 1 to 2 hours commuting. Now it's a non-productive time. It's a loss to the individual, loss to the nation. You have to look in from a larger perspective, not only for the individual perspective. It's a loss because the person is not very productive. Secondly, you look at the congestions and the slow-moving traffic. Report says it is 5 to 7 kilometers per hour at peak times, and that's very affecting to the person also, the person who is driving. Even if you are not driving and just sitting in the vehicle, it is still not helping you. So one driver is how do you give an experience within the vehicle to the person, because now we have seen pandemic, we have seen work from home. I don't call it work from home, it's more about work from anywhere. So technology was there, but pandemic gave us the opportunity to unleash that possibility of working from anywhere. So it was there earlier, it's not a new technology. But then you can be connected to office, you can be connected to anything from within the vehicle if you get some time through that, if you are assisted by the vehicle as you go to autonomous. There are levels to autonomy and things. Second thing primarily is safety. Safety is from two aspects. One is the driver or the occupant, which is within the vehicle, and there is safety to, I would call it, other stakeholders, the community, the pedestrians, the property, and everything. So almost there are 1.5 lakh fatal accidents, so road accident related deaths in India. And worldwide also road deaths count in first 10 as cause of death. So it's a serious problem or a concern. And New York City has its connected vehicle platform program where they have a vision zero. So zero fatalities. And how do we leverage V2X? So how do we make it more safer? Because 80% of the accidents are caused by errors which are more due to the driver or the driving patterns. And how do we assist through a different level of autonomy? How do we guide from the environment, whether at the crossing or the intersections through V2I, make it more safer? So these are the key drivers, I feel, which are going to help V2X also address safety and other concerns. Thanks.
Very good, CVJ. Thank you so much. In the agricultural world, which India hasn't, in many ways, I know there are applications of connectivity even in India where people are leveraging, and those stories are yet to be told. But from your point of view, what are those drivers? Why do you even need it?
And Samir, I'll give examples of the drivers, and these drivers are applicable globally, whether you look at it from a matured market perspective or you look at a market like India, which is still early stage of maturity from an agriculture perspective. It goes down to some of the basic stuff. Population globally is increasing at a pretty decent pace, along with economic prosperity of the folks around. So one of the numbers that's going around is saying in the next 50 years, the demand for food is going to double. So you're expected to have 100% more food generated, grown for the population to be able to survive. That's one. Second is the arable land is shrinking globally. So think about it. It's a double whammy for the farmer. He's expected to double his output with reduction in land that he's going to work on. And that's where technology is expected to play a key role in helping him improve his farm operation as well as improve yield. Third one, again, we have been hearing it, again, applicable within India as well as everywhere else in the world, is migration, manpower migration, moving away from rural places to cities, right? Agriculture is predominantly a rural activity, and most of the manpower, the younger workforce, is moving away from rural places to major cities. So the availability of skilled manpower is a huge challenge globally, and it's increasing even in India. So how do you address it? With the demand from food continues to increase, how do you get that? And that's where some of these technologies come in, and the opportunity for efficiency is huge. If I have to just share a data point about India, right? If you look at rice and wheat, India has the largest area under cultivation in the world for rice and wheat. But if you look at the yield output, our number comes in between 15th and 20th or 25th. Just imagine if you can move that number from 25 even to 15, forget being in the top 10, what happens to the food production? And therein lies the opportunity. And that's what makes this whole space so exciting.
No, that's really fantastic. Vijay has touched upon so many of the sustainability development goals that are talked about by the World Bank: food, fundamental resources, water, less land, population increasing. It's incredible. Thank you for that perspective, a high-level perspective. Yashodhan, from your point of view, which is my point of view, because we are in the electrification space, what is the driver?
One of the things that I must say, like what Chandrasekhar has mentioned, I see in a different point of view, is India really need autonomous vehicles? When you talk about the New York and there is a zero accident, but here, just like give an example, if there is no signal, we often face the issue in Pune or other parts, still there is no catastrophe. People admire each other, they cross the road. This is the reality. Whether understanding level is different league than comparatively to US and Europe. Yes, the autonomous vehicle helps the digitalization and all that technological thing. But for our problems, we have to look in our way, how autonomous domain help in other fields rather than the automotive vehicles? This, I don't know. And the other is when we say the connectivity or big data. For example, Pune and Mumbai, people still have the range anxiety, whether I have to buy electric vehicle or not. The big data will help where to put the charging stations. Suppose I am going from, I'm just giving the local example, Chinchwad to Kathraj, electric bus. Still people didn't know where to put the exact charging stations to charge the batteries, because that's the main soul of electrification. And this digital connectivity helps even the most of the times the electric vehicle domain, the BMS, battery management system. When you do the Tesla launch new version, that battery is one aspect, but every time they update the software, where more features, where there is a safety aspects which play a role. And the electric mobility domain, you can't tell your customer, don't drive in extreme temperature in Rajasthan, Guwahati, or in Leh Ladakh, because that will affect your cycle life and obviously the performance. So this connectivity might give some of the answers for our own problems.
Very true, and if I can relate to that, one of the big issues that's cropping up nowadays in electric vehicles is the safety of the battery, right? Everybody's talking about incidents happening, etc. So connected systems, particularly the BMS giving out data with the VCU captures, etc., can tell you predictively whether this is going to fail or not and by when and how. And perhaps that predictive analytics data is very, very useful in keeping, not only the vehicle safe, but also your anxiety lesser, because you, after all, you want to drive them.
And just to add on that, like if you are driving the electric vehicle, so after 4 or 5 years, you have a X years warranty. And still, by running the vehicle in Indian road condition, temperature, flood, still people don't know globally how much exact energy is still reserved in the battery pack. It's still a Nobel Prize question. Where you play with the software, with the BMS, and then use that battery pack for stationary storage for next 5-6 years, and then do for the recycling. So it's a process where the digitalization, software connectivity play a very important role to go forward.
I think that's a topic for another debate, but
Samir,
VG, I wanted to, go ahead, you want to say something?
Just before your next question, the point that you raised about analytics and big data, just wanted to share an example. Because of the amount of data that we've been able to collect over the last decade and a half, we have released solutions where we are able to proactively tell a customer that the machine is going to fail. Now imagine in an agriculture field, it's a very, very time-sensitive operations. Just to give example, if you think of planting, there is a 5 to 7 day window in which you need to plant. And if you don't plant within that, if you miss that, your end result is not going to be as to the level that you expected. Your yield is going to get impacted if you don't plant during that window of 5 to 7 days. We are talking about large fields across the entire country trying to do planting at the same time. These machines are running 24/7 without stop. They cannot afford machine downtime. In that scenario, how do you enable your technology to give the customer an upfront idea that something is going to go wrong and be prepared for it, or take preventive action before the machine goes down so that he can continue his operations without any downtime?
Awesome. I was going to ask VG, since you're with the microphone, what applications are you close to? Do you view as important, or you're involved in your organization? Maybe we'll start with that.
So let me give a few examples. And again, all of these pieces, whether it's connectivity, whether it's big data, these are all foundational pieces to the domain that we operate in. So if you look at a crop cycle, there are 4 major pieces, right? There is the planning stage or the preparation stage before the seed goes in. There's planting when the seed is actually put. There's application where you're doing spraying multiple times during the season. And then finally, that's harvest, right? All of this are extremely precision-oriented, sophisticated operations which require a lot of precision, right? Now, when a John Deere machine is passing through a field at any given point in time, It's collecting huge amount of data both at the machine level about what the machine is doing, as well as geotagged farm-related data of saying what's happening on the field. And all of this data is passed to our cloud, the John Deere Operations Center, where the farmer or his advisor can go back and evaluate and generate insights of what's gone on. And that helps them take decision for the next operation on the same day or the same season or coming season. For example, let's look about last year's data, right? He would have done an entire crop cycle. He goes and looks at the yield map of saying what happened in my field. And he can look at what parts of my field did well compared to others. And there is enough variable out there which can tell him why a particular part of the field did not do well. Based on that, he can plan appropriately for the next year, saying whether I need to increase or reduce seed population, whether I need to change the seed spacing, whether I need to change seed varieties, whether I need to use different chemicals, whether I need to do different setting on my harvesters, right? Once you do this planning on the cloud, all of that data is transferred seamlessly onto the machine, which then executes it automatically without the driver's assistance. That's the level of data that's getting used right now. Another example is in-field data sharing. I spoke about the size of the field, right? Now, these fields are so huge that you're not going to run only one machine at a time. There are multiple machines running at the same time to do these operations. These machines need to be able to talk to each other. So there is real-time, seamless data transfer happening, saying what have I done, what has the other machine done, so that there is no overlap that they are doing, as well as ensure that complete fields are covered during the operation. Third example, remote management. A farmer does not, in the US, a farmer is not necessarily on the field. He'll have operators who are running these machines. He's sitting back in his office or home, can monitor it real time. Tells him where his machines are, not only where his machines are, how are they doing, and the quality of the progress, right? And if he sees something is not progressing well, he can take corrective action. Let me give another specific example. Let's look at harvesting. Now, harvesters are extremely complex machines, and it requires a lot of settings to be ensure that you're doing harvesting properly. Some of these operators are not as skilled and do not necessarily know the settings and what changes need to be done, right? Now, imagine you have 4 or 5 harvesters running in the field, the farmer sitting at his home and watching it, and he notices that one of the machine is doing really well, is harvesting well. He can pick up the settings of those machines and copy paste them onto the other machines and ensure that the rest of the machines also update the setting, and he's able to get the best possible harvest out from his field. So those are capabilities which have been enabled. Again, the foundation for all of this is back to connectivity, back to big data that we have been investing in all these years.
These are fantastic examples. In fact, there are examples in India as well where people are using IoT and connected fields to at least get a kind of an overview of when they need to do the next thing. They may not have an autonomous vehicle, but at least they get that dashboard and they're able to plan in advance, etc. So there are villagers who are actually using it. I'm going to come to you, Yash.
I just want to add one thing. Like you given the example with the US with your data. So one thing, when company has a plan to shift to Indian scenario where there is a diverse range, and as well as where there is no grid connectivity. I'm talking about microgrids, which is storage and all that, how this is going to work.
And that's something that we are in the process of addressing, Yashodhan. Again, just like most of the MNC companies, you cannot copy-paste what's worked in the Western world and copy it in Indian context. The contexts are different. The maturity of the entire agriculture industry is very, very different. So we are in the process of adjusting our solutions, our products, and rolling them out. So there are some advanced technologies, which one of them we have rolled out last year, and the others are coming out next year. And we have a complete roadmap of how these are going to come out to the Indian market. But yes, as you said, they are going to be very, very tailored to the Indian context so that it works in India. We are very clear that what worked in the US in a 2,000-acre farm is definitely not going to work in a half-acre field in India. So the solutions are being adjusted appropriately.
Super. CVJ, CVJ spoke about productivity, he spoke about safety, he spoke about the experience, and he spoke about one very important thing, pure sanity. Going from Pune to Mumbai, I do it every week, twice, and it's just driving me insane. what do you get involved in the most? What areas are you involved in as far as connectivity is concerned?
Yeah, Samir. So primarily it's across various industries and customers we are working with. We have different areas we can classify the overall applications into. But before that, just to address
Sure.
Yashwantan's point. So while US may be at an advanced stage, in India, I understand we have different mix of vehicles on the road, we have different kind of road conditions. But autonomy also has its own levels of maturity. And we are already seeing adaptive cruise control, assisted braking, DMS, driver monitoring systems coming in place. So even a driver falling sleepy or for any reasons under influence or things. So fleets are going to get benefited by driver ratings, which are pure algo-based things. Connectivity and algorithms, AI/ML just helps do that. So it doesn't need a very high level of autonomy to do that, but definitely it helps you in reduce any damage, any accidents, and also assist the person. That is one aspect, and that is one of the areas, Samir, that we also work on. The other areas primarily, if we look at it, it's different. Basically, we see navigation everywhere, route planning, now route optimization for fleet. That is another area where fleet wants to have their fleet to be more fuel efficient and so that they spend less on the things. There is more on the vehicle health, integrated vehicle health and safety. So predictive maintenance, any eventual breakdown that is going to happen. So these are the areas that are being worked upon. Obviously, there are regulatory things also, emergency call and big call and those things are there, definitely. Then there is something that is leveraged also internally by the companies. So how do we leverage the data? We talked about data for our design and development. So looking at the actual data on the ground and helping design development, even helping service on the eventual inventory and stuff. So that's something going to come. Then it also helps customer profiling from the overall things. So internal uses are there. Monetization, providing consultancy, it is more effective in case of fleet, where you can provide consultancy on based on various driving patterns and their usage, how they can improve on the fuel economy and stuff, and how to make the fleet effective. Insurance and other things are yet to come. There are certain regulatory things, there are certain other things to be worked upon that, but eventually it will come.
Yeah.
And online banking, online services, entertainment is anyway hygiene thing.
Yeah, one big thing that we are noticing is that all OEMs world over are moving towards vehicle as a service. And vehicle as a service is enabled by nothing but connectivity and big data and analytics. So unless you have all these three working in sync, you're not going to be able to provide that as a service. I've seen that actively happening in the e-mobility world, where all the fleets are moving in that direction and OEMs are enabling that. So that's a big topic of debate. But just to keep this lively, I'm going to not ask one or two questions which I had planned earlier on technology, because you can get lost in technology. I'm going to allow some questions from the audience to kind of liven this up a little bit. And we'll come back to technology if we have time to close it out, yeah, if that's okay. So I would, at this stage, like to go around and request for questions as they come. We have about 15 minutes, so I'm going to just keep this a little bit lively.
My question to Dr. Yashodharan, so you touched about battery and all those things. So everyone want to move to EV from a sustainability, from a climate perspective. But I don't see in India we are evolving from the battery space. If you ask me, we don't have a good EV car produced by Indian manufacturer which have a good range. If you want to go for a good EV vehicle, I need to go to the German manufacturers or Chinese manufacturers. It will cost more than 50 lakhs. So what are you doing in this space to evolve India as a market?
Yeah, thanks. Very good question. Like, government is doing one thing, like PLI scheme, might be you have read, to make in India cells. Because at the moment, and still for few years, we have a dependency on our neighboring country, which owns the lithium mines to Fe and all that material. So yes, there is a dependency. As you mentioned, at the moment, the companies like Tata, Mahindra are making the electric vehicle. Nexon is a great success. And it's all about range anxiety. Every day or every week, I'm not going to Pune, Goa. Every day I'm going to office, say 50 kilometer max or two-wheeler, from housewife to college kids. They are driving less than 25 to 30 kilometers. And the battery, good quality, Indian manufacturers, Bajaj, then TVS, and startups like Ather are doing fantastic job. They are doing the two-wheeler, where you have initially few years warranty, 2 to 3. But if you are driving in that domain, less than 30 to 40 kilometer, you will have 6 to 8 years, no problem. So that is one thing. The lithium-ion battery cells making is going on, and parallelly, if we have resources, but we have to look the alternative technology, say sodium ion, though the energy is not very high, but it's a power and which matches our requirements, a country like India, where safety is the main and temperature, because the country, if the temperature rises, it's a killer for the battery. And everything comes to the battery. If you talk the EV domain, more than 40% costs come from the battery. So there are good players. So my request to everyone, make in India vehicles, especially two-wheeler, which brand, rather than going for the cheap. If you go cheap, you go up. So that's the thing, because there are a lot of fires and you have to resolve that. So give some breathing time, because IC engine is 150-year-old. Still there are fires. Tesla got many fires initial stage. So don't be scared. Yes, this is a bomb, but you have to handle it carefully. And this is the way to go forward.
I don't know how many electric users in this audience. Okay, I am one, and I'm completely, as far as city driving and as far as last mile driving is concerned, not an issue. Not an issue at all. Forget about range anxiety. Even storing and saving the car for 30 days when I went on leave and I went on a trip, came back from 99%, it went to 93%. So not an issue. It's only when you're going in intercity, whatever, all the statements he's made are all correct. So I would say jump and use it, it's fun. Anyway, next question. We don't want to get into just electric mode here. So you may want to state your name so that it becomes more interesting.
Thank you. My name is Sachin. I have two questions. One, as you rightly mentioned, a lot of big data will be collected while these connected vehicles are in operations and all. So how do you think and where do you think this can probably help in a country like India, where there are issues which are very, very basic at nature, such as the basic infrastructure, the overall commute time, as well as optimization of your overall commute experience? That would be one. The second thing, how again this data and these connected vehicles, if you put it to larger perspective, like the public transport, this is like pretty poor in India right now, how that can be optimized using technology as well as this collective vehicle platforms.
Sachin, who are you asking, or can I redirect to?
Three of them. I mean,
anybody?
they are all experts,
Okay.
so I don't.
All right.
I
So
don't
maybe VG, you want to start first, and CVJ, you can.
So I'll again speak from an agriculture domain, because that's where I operate. And India, again, as I said, for us, whatever I spoke about, whatever example I spoke, were more of the evolved Western countries. That's where the market is mature and ready for all of this. We still believe India is very, very early in this game of connected tractors and big data from an India perspective. It started. You see a lot of interesting agri-tech startups doing some interesting work in this space. So it started. Long way for us to go. The challenges in India with, as I said, starting with small farm size. How do you make it profitable, effective to give an effective solution in half an acre is a much bigger challenge than for anybody to say, I can give you a solution in a 200-acre field. It's very, very different. What crops to plant, when to do your irrigation. All of those solutions have started. Connected vehicles, connected tractors in India, if you ask me today, at least 10 years out, if not more. There's a lot of basic things, even mechanization. From a pure mechanization perspective, we have a long way to go in the farm industry. First, all of that will pick up, and then will come the stage for us to talk about some of these advanced technologies being used in India. But I'm hopeful it's not going to take as long as what it took the rest of the world. Just like any other technology we take of mobile technologies, we are going to leapfrog a lot of these things because technologies are already available. So it will come, but not in the near future.
So, CVJ, can I answer one question? Look, I deal a lot with fleets. One thing I do know in India is that a lot of commuting that happens between people as well as between and with goods is moving from single owners to fleets. And that market is growing extremely rapidly. Now, when you want to run your fleet, one of the biggest thing you need is data, because you want to optimize your fleet size, you want to optimize where your fleet runs, from where to where, how, are you doing your driver analytics properly? Are you effectively utilizing your, whatever journey? Are you charging your infrastructure if you're using electric fleet, etc.? Data is required more in India than anywhere else, if you ask me, in the next 2 years. If fleets are going to actualize their returns on investment, because it's all about running a business, it's all about optimizing using big data. So it's going to be a huge requirement. And I'll tell you that most OEMs are not bringing their fleets or selling to fleets such as Blue Smart and others. They're actually selling them data-driven analytics more than just the fleet, because they're saying you can optimize using our environment. So trust me, that's happening here and now.
Can't agree more, Samir, on that. So more or less same thing that I wanted to talk about. The other aspect the data also helps on is the way it helps on the fleet and many other things. Some activity has started on that front. As Vijay said, it will take some time to mature to a level where we see it everywhere. The other aspect is, like today we have multiple regulations coming up, emission regulations coming up. So using data and simulating the environments or the conditions and using AIML to expedite that and get faster to the proven vehicle is something that we are doing that in one of the cases. And data is helping there with the connected vehicle being run, though in a prototype state. So those are also areas where within India also we are doing that. And eventually, even from an Indian condition perspective, like say roads, definitely it has improved a lot, and one of the world-class roads we are having now in India also. So it is going to improve definitely. But we relate Indian roads with potholes. A simple pothole detection kind of a small application, okay, can help, and it is there. I've not seen this with Indian thing, but Western slippery road detections and informing other vehicles about the slippery conditions. That is relevant in India because we have that conditions everywhere. We have monsoons in all those kind of conditions on the road. So there is an Indian context to all these applications, though not for some very far-fetched applications. And on the other second question, there was one point which I forgot or missed in the earlier application thing. Smart cities is the thing now. It's happening, and it is bound to happen. Multimodal transport is something that is the future. Today, you go by a cab to a place, pick up a metro or a plane, and then land into another area, pick up something else. How do we integrate this? And I have seen this, heard this in one of the visions of smart cities by one city. So it's not that it is not going to happen in India, it is there. It's not yet on the road, but it's there in the vision. So definitely it will happen sometime.
Just to add you on that, like in my previous work, we have given the battery packs to over 1,000 electric buses in India. We have many million kilometer data in Indian condition. Still the question is, it's early stage. I have a data, but how to use that data? Don't know how to make a business case. It will help in safety, connectivity, charging infrastructure, and multimodal is going to come. Like for example, if I fly to Bangalore and Bangalore to electronic city, I use the electronic vehicle. Still there is no system in India to have a carbon footprint. I get a tax benefit. If it happens, people will start using it, and electric buses will go like a hockey stick, and then 2 and 3 wheeler. Still, car is not affordable. If some OEM come up with less than 10 lakh rupees car, with electric, single charge 200 kilometer, people will think. That's the reality at the moment. But electric buses, because public transport, people, half of India use public transport. We are talking about that population, not about the smart city where hardly people use. So electric buses will go much faster in Inea.
Thank you, all of you, for your inputs. We'll probably have time for one more question, and then we'll wrap up. So, would you like to go? Yeah. Sir, उनको जरा microphone देंगे?
Thank you. So, lot of...
What's your name?
Sorry, my name is Anu Kaushal from Cummins. I heard a lot of new ideas and on technology. What I am trying to understand from you all, maybe you are all already doing it, is that are we having a startup mindset? Because you are all established companies already, right? But are you having a startup mindset where you are providing solutions to the customers or consumers without thinking of getting profit and trying to build up a market? Because that's what the buzzword is, right? Startups are trying to get more data from the consumers and then build up a future revenue stream rather than current. So is it something which you all are also looking at?
Yeah, like just to give the answer, my previous organization, it's like a startup from scratch to gone to very high level. The electric mobility domain, we have to work whether it is established companies like Cummins, John Deere, or Tata Technologies. We have to work like a startup, because all we are connecting the dots from mechanical, electrical, chemical, and to build a product. And there should be iterations. And because we are competing with existing 150-year-old IC engine, so you have a mindset with the startup culture, and people are adopting that. Then only the companies like Ather from scratch or other companies are getting success. So it should be a startup culture in this domain, whether it is established or not.
Yeah, great question. So let me give you a John Deere example, and it's an absolutely the way we have done it, right? As I said, John Deere is about a 180-year plus company. Entire history has been all equipment manufacturing organization. But the leadership a few decades ago had the vision to say this is where we want to head. And at that point in time, they carved out a small group, started with about 2 or 3 members group, saying that let's focus on technology. And that group eventually got to where it is today. We used to be called Intelligent Solutions Group. How do we make our machines more intelligent, right? Started with a 3-member group over from 1998, operate, and they were treated separately. Nobody looked at their P&L, nobody looked at the return on investments. A lot of money was put in, and that's paying dividend 2 decades later. Today, when we released our new strategy about 6 months ago, technology is the central pillar of that whole strategy for the entire enterprise. And that's where the change has come, starting from that 2 or 3 member team and the leadership believing this is how we need to do it, to today where it's the core part of our strategy.
About when the same thought process, what about investing in India? Getting the solutions delivered to the consumers in India without even saying, because Indian consumer or customer may not be able to spend money out of the pocket.
Absolutely.
Right? So, but there's a lot of, for the companies of like yours to gain from it. Right? So any progress on that?
The focus is exactly the same. We are going to replicate this, saying that a small group start looking at it. Another thing that has happened over the years within John Deere is saying that we are very, very clear that we are not going to build all the solutions. We know that there are smart people outside, smaller folks who are more nimble, who don't necessarily have the constraints of a large organizations and can work and deliver faster. So if you look at us globally, we have about 240 partners on our platform. And that's exactly what we plan to do in India, work with partners. So we have been actively talking to a lot of agri-tech startups, saying, what's the progress they are making, and how can we continue to work together. So that continues to be an area that we will continue to stay focused on.
This is more for OEMs to answer this question, but from what I see, I definitely see that mindset. Because see, today's conditions, today's scenario demands agility, demands collaboration. And I see design thinking happening. As Vijay rightly said, I see some focus groups or different departments being created just to look at these aspects. And that brings in required agility. There's a lot of collaboration along with other startups too, to bring in the value proposition. So I see that is happening.
You know, in the electric world, there are probably 500 new companies that get formed annually, and probably a few of them fold up. But I think overall, whether it's an OEM or whether it's a startup or whether it's a company that's beginning to evolve, everybody is rethinking their models, because ultimately you have to solve a business problem and a people problem. It's not just about surviving through government funding or through something. You've got to solve a problem, and you've got to make it profitable for whoever is running that business finally. So there is a lot of startup activity, and large OEMs are working very closely in unison with startup companies and other mid-sized companies to make that solution happen. We can see it happening, and we can see the world is changing, and very rapidly. More so in India, in fact. And there are hundreds of such companies. We've not delved into the topic of technology, but I think it's sufficient to say that with the advent of 5G as applied to cellular and Wi-Fi technologies which exist in V2X, latencies will come down, and there will be more, applications and communications that will allow vehicles to be very close to each other and yet be safe. And there's a lot going on in that space as well. We've not touched upon that today, more so because communication specialists are not there to talk to us. But I thank you for your patience, and with this, I'd like to you want to ask one more little question, and let me ask one question to each one of them first. As he asks his question, and you can send him the microphone, I'm going to say you can answer by also giving your last lines on this topic. So answer and also say one last thing that you want to say about this space, yeah? So first, let's hear the question, and then we'll wrap up.
Sure.
Go ahead.
We are talking about a lot about data and connectivity, and from the connected vehicle perspective, it is as good as car as an IoT device. So what are we doing on the security, especially at the vehicle level, because it is directly related to the safety of the vehicle and the passengers.
Brilliant question, and great way to end it. I'd like to start, maybe CVJ, you can answer first because you were big on this when we were having an offline. And then you can also wrap up by giving your one-liner.
Sure. Thanks, Amit. So, good question. Good that you brought it up, because cyber security is becoming very critical. And if you look at last couple of years, 3 years, we see a lot of cyber attacks and stuff happening. And with vehicle becoming as good as software on wheels, it is, I would say, more vulnerable, becoming more vulnerable. So there are different technologies that are coming in, and it is more of a layered approach, because it's not only about securing a hardware piece or a software piece on the vehicle, but it is about securing the complete stack up to the application, because there are multiple points of attack from where it can be attacked into. And how do you use encryption technologies? And multiple TLS and things are very common for communication. How do you harden the hardware and the software inside the vehicle? There are gateway and controller approaches within the vehicle architecture. So the architecture needs to be done from that perspective. Your cloud, how it is secured, how does it allow only that vehicle in that condition to communicate, how, and even the eventualities if for any reasons the vehicle get hacked or misbehaves, how do you eliminate that? All these things, intrusion detection. So whatever we have seen in the IT space in last 10 years, 10 to 15 years, Same thing in a different context we are seeing here on the vehicle, and everybody is working on that. To an extent it is there, but cyber security is only the level of difficulty you go on increasing. So there is nothing like I have reached there. It is evolving. Just to add your last thing, Samir, I talked about software-defined vehicle. With 5G and other things, I feel if a software-defined vehicle and a software-defined infrastructure work in tandem, I think there are going to be multiple possibilities, because the way 4G unveiled the app ecosystem, this is going to open up the ecosystem for multiple other different kind of applications. Thanks.
Thank you. Thank you, Zivij.
So again, very good question. And again, even from within Deere perspective, we say that every tractor is a node on a network for us. That's how we evaluate. You can literally connect to any tractor sitting anywhere in the world if you have the right credentials to access those tractors today. But the solutions are the same, just what CV mentioned, right? And what the IT industry has seen over the last decade, couple of decades. Same thing apply to a tractor world with the right context. And as CV said, the game is never over. You just always need to stay a step ahead of whoever is trying to get into your system. And there are attacks on a daily basis, both on the digital side of things as well as on the hardware side of things, embedded side of things. There are enormous amounts of attempts being made. You just have to stay a step ahead of that, and there's enough precautions being done. As I said, it's not only for us, it's not only just the vehicle that is important, it's also the farmer's data. The way we draw a parallel is for a farmer, his farm-related data is equivalent to a financial data for us, right? You're not going to be exposing your bank details openly. So farmer does not want to expose his farm-related information. So we have to protect the data as well as the equipment, and all those precautions are already existing in place. And to wrap up, again, very, very exciting space. Again, agriculture, as I gave some examples, hopefully you've got a flavor of it. But having lived in this world, it's an exciting space to be. Technology has a huge play in it to address some of the challenges that I mentioned. And this is just the beginning. And as Deere, we keep saying the best days are just ahead of us. This is just the beginning.
Yeah, as he rightly mentioned, like it's a great space in electric mobility domain. And the startup, one of the good thing in India with the startup has more Indianness, more Atmanirbhar Bharat, rather than talking. Actually, we are delivering for our people, developing for our product. And the base, like in next 3 to 4 years, surely we will have made in India cells, which is sustainable. So the dependency over the neighboring countries will reduce. And the technology front, yes, we have to look with the other alternatives other than the lithium. It takes some time for the maturity, but it's a matter of 4 to 5 years to go further. So technology is the right answers, and go electric if you get chance to go.
Thank you. I've enjoyed this debate thoroughly, although I was supposed to chair it, but I've enjoyed it thoroughly as much as I hope you have enjoyed listening. Thank you very much, ladies and gentlemen.
Thank you so much for this fantastic power-packed session. I'm sure, like me, everyone present here thoroughly enjoyed it and were wowed by some really interesting facts on V2X. Here's a small token of appreciation from Nasscom. Samir, sir. Mr. Yashodhan, go through. so much.
Come, let's have a group picture.
Yeah.
Now, will we ever see this picture?
Yeah, sure. We will now take a short tea break, post which we request everyone to please join us for plenary sessions in the adjacent hall. Thank you.